Good morning. How are you? After so long. So today we are meeting here for the purpose of the marathon. And in the marathon we generally focus not entirely as we did in the class, but entirely exam focused, which we will be doing around 20 hours. Whatever we did in 110 hours, we will be covering it in 20 hours, maximum 20 hours, 18 to 20 hours. That's what we planned. And in that, how do we proceed is, generally we take up a concept and we'll try to revise the concept, then based on which we'll go to the question bank. So in which we see some past 3 exam question papers, RTP, MTP, which I have already compiled, and we will see how the types of which type of questions are being asked in the examination and is it matching with the concept which we discuss about, so that you get better understanding with respect to how to appear for examination. And as you already know, the weightage of each chapter, is, if you look at the first chapter, Indian IRF, regulatory framework, that is 6 marks, only one question will come. And Contract Act, that is having a 32 marks weightage in the examination. Then SOGA, Sale of Goods Act, 21, Partnership 20, LLP, again only one question, that is 6 marks. And Companies Act is having 21 marks, and Negotiable Instrument Act having 14 marks in the weightage of examination. So, as I plan this, we will not go by the order as we repeat even in the class also. We will try to go like the easiest with more weightage in examination point of view. One suggestion is for you is, even if you attended here and there, bit of a class revised there, not revised anything, if you know bit of a concept and you have attended this marathon 3 days, today, tomorrow, day after tomorrow, continuously, and follow it up, like after going home, read, revise everything, practice the question, there is a high chance that you can clear. Even attending this 3 days marathon will help you such a thing. Even if you attended the regular class also, because that went up to almost a month. So that is so much of scatteredness. So here it will be very like crisp kind of thing. Here also same 50% efforts has to come from you people also, because you have to go revise, come with the doubts, solve the questions, right? Do the writing practice as we discussed in the earlier class. So now as we read in the class, again we will begin with Companies Act. Then again we will go to Partnership Act. This is the first priority which we do, because it is simple, only one chapter, no units, and then go to partnership, and then we come to LLP. These 3 are one set of chapters. If you look at these 3 things, then around 47 marks has been done. Once we do it, maybe today along with the tomorrow, then immediately we will go to Indian Contract Act. Once the Indian Contract Act is happened, then we go to SOGA. Which 2 are connected chapters again? Which 2 are connected chapters? Around it is 53 marks weightage. So if you total it out, it is 90 marks. You can leave out the other chapters. I'm not telling you should leave. I'm telling that you should be at least very precise and perfect in this chapter. This is what the scheme of agenda.
So which paper will be given for more than 100 marks?
120. One question will be choice. 20 marks in each question. 7 plus 7 plus 6. A, B, C. So 7 plus 7, 14 plus 6, 20. There will be 6 questions instead of 5. One question you have to leave it in choice.
ICAI option.
No, that this is actually 38 marks question. Out of which there is already one choice in question number 6B. Indian Contract Act. Along with that, one full question itself is choice. 1, 2, 3, 4, 5, 6 is there. You have to write 5 questions. So, without any delay, we will begin. Actually, there is, even I have prepared a question bank also. See, what I did here is, I have taken all the 7 chapters consisting of previous year paper, revision test paper, mock test paper from 2020 to 26. Initially, I thought of 2018 to 26, but I felt it is too old. The question patterns are totally changed. And even if you take from 20 to 26, it is almost 6 years. So, around some 15 attempts have happened already, because 3 attempts from 23 it started. Then again before 15 attempts means 15 previous year papers. Again, 15 RTPs and 30 MTPs. Because every attempt will have 2 MTPs mock test paper, and it also have model test paper questions. Model test paper is different. There are 10 papers which has been segregated. It is segregated in a chapter-wise format. If you do this material along with this question bank, that is sufficient. No need to do anything at all. So it is like, if you see, in the first chapter there are 15 questions which I have taken. Again, contract act has 104 questions. SOGA 59, partnership 51, LLP 16. Look at the ICAI also having similar weightage. Because it is only 6 marks weightage, maximum 15 questions are there. Here also 6 marks weightage for the entire paper, there is also 16 questions. So then any chapter which has around 20 marks weightage has 50 questions around, because the similar question paper pattern has been followed. Something which has 38 marks, like double the marks, double the questions, and here it is also around 30 questions, 29, because it has come in the later 23 syllabus. Earlier it was not the negotiable instrument. So earlier what I thought is keeping all the questions at one place and answers at one place, but later I felt no, you should again come back, that will create unnecessary things. So later I put all the questions and answers at same place only. And if you see the question number here, I'll take some 5-10 minutes so that we'll be familiar with these things. This is starting with chapter 2, question number 2.1. That means chapter 2, that is Indian contract, the first question. Instead of putting 1, 2, 3, 4, 5 everything, I told 2.1, 2.10, 220. That means if I tell the question numbers which important, 210, 211, 215, 235, 267, we should compulsorily go through those questions so that you can easily come to it. You can do it. So if it is chapter 3 question, so it is starting with chapter 3, 3.1, 3.2, 3.30, 40, 50, all those things are there. If it is chapter 5 again, what is this? This is chapter 6, compulsory. It is starting with 6. So be active. So shall we begin? Ready for the one final push. Online, can you hear me? Audio video clear for you people? Yes. Okay. So if you have any doubts, ask it in the break time or maybe after the class, but not during the class. Whenever the marathon is going on, it is one-sided, one-way kind of thing. So first we will begin with Companies Act 2013. So cutting short all the unnecessary discussion we do it in the class for making you understand every concept, we will directly jump to the concept. What is Companies Act 2013? So Companies Act 2013 is an act which is passed by the Parliament in the year 2013, which was applicable from 1st April 2014. If you feel something important, you can make note of it. So which is the latest act which is applicable for all the companies in India. When I say all the companies in India, the companies which are registered in India, the companies which are registered outside India but having place of business in India, for them also this Companies Act is applicable. So first of all, we should understand what is company. What is company? So there are many sections based on which the act is being specified. So section, whatever the section I write, that is important. You should try to remember section. Which section? 2 class 20 of Companies Act 2013. So whenever I tell 2 bracket 20, it is always Companies Act 2013 is always there. Whenever you write the answer, also you should mention it. As per 2 bracket 20, what is company? Company means a company which is incorporated under this act or any other previous company law. Any other previous company law. This has to be required. So what is it? The definition simply says, if you are registered under this act, what do you mean by this act? If you are registered under Companies Act 2013, or either you have registered under any other previous company law. For example, 1956 was there, before that 1908 was there, so many Companies Act were there. If you are registered under any of these acts, then you will be called as company. If you take the latest companies, like Blinkit, Zomato, all those things, that is falling under 2013. But if you take Tata Steel, Infosys, all those things, that is falling under 56 or 1908. Tata Steel comes under 1908. So that is why we tell. Just by looking at this definition, we can't understand what really company looks like. Then just told what is company. What are the features of company, all those things has to be taken care. So one very important question the examiner will always test is, what is company and explain its features. If you look at the question, they told what is company, not state the features. They will tell explain its features. You have to explain the features. So the features of company are, there are how many features? Generally, every question in the examination will be of 7 marks, 6 marks. Generally, these questions are there. Or sometimes the 7 marks question is divided into 4 and 3. 4 marks one question, sub question, and 3 marks one sub question. So if this question comes, generally it is for 7 marks. So 7 marks question. And we will discuss the writing format one more time. How do we write the case study question kind of thing later. But if it is 7 marks question, try to write the introductory part. What is company? And the features. How many features are there? Can you list out the features? First one is separate legal entity. The second one is perpetual succession. Third one is limited liability. Fourth one is artificial legal person. Then common sense. Then if you want, you can extend it by, like, it can have a bank account, it can sue the other party, it can do all the activities which a person can do, everything can be done. Now, when it comes to separate legal entity, what do you mean by separate legal entity? Now, business is different from this thing. First of all, you should understand here, as we discuss this entire definition itself for half an hour in the class, but like what is means, what is A, what is incorporated, but I will not discuss here. If you look at the language, they use the word incorporated. What is incorporated? Yes, humans, natural persons will take birth from the mother's womb. The companies also have to take birth from some authority. So that authority, whenever you get incorporated, you will be treated as a separate person. That means, as we can have bank account, as we can have a car, as we can do the business, as you can have a property, the company is also treated as a separate person which can do all the activities. Except that it can't marry, it can't take divorce, all those things are not possible. So separate legal entity simply says that members are separate from company. That means they're simply trying to tell whatever the activity done by the company, for which company itself is entirely liable, and whatever the activity done by the members, that is members itself is personally liable. Members will not be liable for the activity of the company. Company will not be liable for the activity of the members. So it is separate legal entity. You are a separate person. I am also a separate person. That is what separate legal entity concept is. So then comes perpetual succession. So what is this perpetual succession? Perpetual succession means what? Perpetuity means going, keeps going, infinity.
Never ending.
Never ending. It is like what? Continuous. So whenever a company is being incorporated, company can also get closed, but not immediately or not voluntarily. So whenever you start a company, the main motto of the company is that they want to sustain for a longer period of time. That is why one of the feature of the company is perpetual succession. Company has no ending. So what do you mean by company has no ending? See, when it comes to a company, we need few minimum members for the purpose of incorporation of a company. With respect to private, 2 members. With respect to public, it is 7 members. If the members sometimes die, if the members sometimes new members get into company, if that few members go out of the company, it will not affect the existence of the company. That is what perpetual succession. So members may come and go, members may die, members may get admitted, members may get retired, but the existence of a company is not being affected. That's what the concept called as perpetual succession. Perpetual succession. So what is that? Members joining or dying will not affect existence of the company. And you have to write one more point here, that is, it is never ending, it goes forever. Company is forever. Company has no time limit. It keeps on going forever. This is the second perpetual succession point. Then comes limited liability. Limited liability. As we told earlier in the first point, separate legal entity, where the members are separate from the company. When they are separate, you are responsible for your debts, I am responsible for my debts. So who am I? I am a member. For what I am responsible, see, like how do I become a member? I become a member by way of purchase of shares, by way of buying the shares. Whenever I buy the shares, every share will be having a face value and paid up value. Face value and paid up value. So if I am a shareholder who bought 100 shares, Mr. A, who bought 100 shares, which is having a face value of 10, which is I already paid 5 rupees as a paid up value. Now, as a person, as a member, my total liability itself is 100 shares multiplied by 10 rupees. That is 1000 rupees is my entire liability. But out of 1000 rupees, I already paid 5 rupees. So remaining is 100 shares, I have to pay 5 rupees. So my remaining liability is 500. Whether it is remaining or total, what is the limited liability? The liability of members are limited. The liability of members are limited. So how much? Actually, as I told you, unpaid up capital, we will try to categorize it into 3 parts. The liability of members is limited. So how much it is limited? It depends on what type of company you are a member. You are a member of what type of company? If you are a company limited by shares, if you are a company limited by shares, then your liabilities to the extent of unpaid up capital held by you. What do you mean by unpaid up capital? Out of 1000, you already paid 500, remaining is 500. That is your liability. If you are a company limited by guarantee, then your liability is the guaranteed amount. Here only the difference is company will not have a share capital in case of guarantee. Here company has share capital. And the third type of company is unlimited company. Unlimited company. Here, as the name itself says, the liability is unlimited. The liability is unlimited. But here, few extra points, because this question itself, the liability of members, unlike you yourself, the liability of members, they'll ask, how do you classify the company based on the liability of member? This is one examination question which is actually come. The companies are classified into 3 parts. Limited by shares. This is a 3 or 4 marks question that can be asked in the examination. So here, what has to be written? Company limited by shares, company limited by guarantee, unlimited company. Company limited by shares, the points again. The liability of the members, see, I am writing it in this manner, but you should add masala. The liability of the members in case of a company limited by shares is to the extent of unpaid up value of the share capital which is held by the members. You should try to elaborate that line. You can't expect me to tell you. Now, the one specific very, very important point here is, if you are a member of a company limited by shares, any liability, any amount which you have to pay to the company, that money can be called during life of the company also, as well as at the time of winding up also. So what do you mean by winding up? Whenever the company is closing, then also you can call the money, whatever the remaining 500 rupees, or whenever you are running the company, like in a day-to-day life, then also you can call the money from the shareholders, which is unpaid. So, if it is a company limited by shares, it can receive the unpaid up shares value either during the life or during the winding up of the company. This point also has to be there. But if it is a company limited by guarantee, it can be called during only winding up of the company. Only during the winding up of the company. Whenever the company is being in operation, then they can never touch the guaranteed shareholders money. Then, if it is unlimited company, same. It is also at the time of winding up of the company. Only during these times it has to be called. Now, one specific point which I again want to highlight. Now, don't write if this question comes in that as a part of that question. So, if the question comes as company liability of members based on these things, only write this part. It will happen like one page, 1.2.5 pages. That is sufficient for 3-4 questions. One page is sufficient. Now, there can be one more question which says, which we will generally discuss in MOA and AOA. If you are a company, definitely every company should have MOA as well as AOA. We call it as charter of the company, memorandum of association as well as articles of association. When they want to prepare the MOA and AOA, will they directly prepare in one A4 sheet paper, or is there any format given for those companies? So there is a format which is given under some tables. So there are 10 tables. For the purpose of 10 tables, we have to understand the company again classification. As I told, first classification is limited by shares. This is the. Then second classification is derived using this part. Two classifications will come here. One is guarantee with the share capital. Second one is guarantee without share capital. Guarantee without share capital. What do you mean by guarantee with share capital? Company has taken the guarantee from the members as well as the members also purchase the extra shares also. Then what is the liability of the members? If you talk in terms of first guarantee with share capital, my liability as a shareholder is unpaid up value of shares plus guarantee amount. Because guarantee with share capital, I have taken guarantee also, I have purchased the shares also. If it is shares related money, that can be called during the life of the company, winding up. But if it is guarantee related money, that has to be called only during the winding up of the company. This is what it is there. So again, unlimited company also with share capital or without share capital. With share capital or without share capital. These are the 5 different classification of company which can come based on liability. Now when it comes to the MOA and AOA, how do you prepare? Which format has to be applied? This is a separate question by itself. So the format applied is table A, B, C, D, E. MOA you should remember, table A for company limited by shares, table B for without share capital is table B. Wait, let me change it. The way of writing. Because you'll be able to easily remember table A. Guarantee without share capital is table B. With share capital is table C. Without unlimited company without share capital is table D. It is table E. These are the 5 tables or 5 formats in which the companies have to prepare their memorandum of association. When it comes to articles of association, they have to follow A, B, C, D, E, 5 completed, then F. F is the articles of association table for company limited by shares. Then here one small twist is there. What is the twist is? Instead of GH, here there's a G comes later and H comes earlier. Instead of IJ, it is J and I comes later. In case of AOA, with share capital comes first, without share capital comes later. But in case of MOA, without share capital comes first, with share capital comes later. So if you want, you can remember it the way you want. This is we're discussing company and its features. The third feature which we are discussing is limited liability. The members' liability is limited. How much limited? Depends on what kind of company you are. If you are a company limited by shares, guarantee, unlimited, with share capital, without share capital, this is what the liability concept is. Limited by shares.
This explains that.
AOA part. See, generally in MOA, without share capital, with share capital, without share capital, with share capital, we have written. We have classified company in that part A, B, C, D, E. The table formats, like how in which format you have to prepare MOA and MOA. AOA says F, G, H, I, J, except that, but not in without share capital and with share capital. In AOA, with share capital comes first and without share capital goes later. Then you can tell E, F, G, H, I, J. Because with share capital is here, F, G, then H, I, then A, J. That's the other way. With share capital comes first in case of AOA, without comes later. MOA without first, with later. So that is limited liability. Now the next feature of the company is artificial legal person. So what is artificial legal person? Look at the language. It is artificial. It is not like you and me. We are natural persons. We have taken a birth from our mother's womb. Artificial means we created it. Man-made creation is called as artificial. So what is legal person? It is a person in the eyes of law. An artificial person in the eyes of law is called as artificial legal person. So this ALP, artificial legal person, sometimes it is also called as AJP, artificial judicial person. Both are same, legal or judicial, everything is same. So here, where company is existing only in the eyes of law, that is why we call it as artificial legal person. Where the moment it is a person, it is like same us, except it cannot take birth from a mother's womb, it can't marry, it can't die. Some except those features, it can have do everything. It can have a bank account, it can enter into contract, it can have a property, it can sue somebody, it can be sued, except everything can be done using this artificial legal person. Like same as natural person, except birth, marriage, and death.
So every separate legal entity points to value.
Very good. Very good. So here the feature, one of the what is beauty of this feature is you can write any point, any expression for any point that suits there. You just have to be able to match it to that wordings. That's it. If you write separate legal entity, where in which separate legal entity is a concept in which members are treated separate from company, where company can do everything by itself, both the bank account, everything. Artificial legal person is a person where it can similar to natural person except for those buildings, but it can have its own bank account, property, everything that can also be written there. It is there in your understanding. Yes. Then comes common seal. What is common seal? So this is my signature. But because company is an artificial person, it don't has hands, everything for the purpose of signature. That is why we have a common seal. That common seal is an official signature of the company. Official signature of the company. Where the moment the common seal has been here, what is imprinted on the paper, that is the company has been signed. But because of the evolved frauds and scams which are happening using the common seal, Companies Act felt no, common seal anybody can get it by way of some paying 100 rupees, 200 rupees, they can get one more common seal. They told whenever the common seal is there, the common seal has to be authenticated by two directors of the company, one MD, one normal director. Then later from 2015 and 16, they made common seal as optional. Common seal is an optional from 2015 and 16. So then if it is optional, then how the signature will be done? It will be done by two directors, out of which one managing director, minimum one managing director. Two directors have to be signed, out of which one should be a managing director. This is what the common say. Yeah, director and company secretary, that is also possible. So this is what the features of the company. If they ask for 7 marks, try to write it can have bank account. 6 point. Have bank account. Because company is a separate legal entity or artificial person. It can have its own bank account where it can do transactions, make payments, receive payments, everything can be done. So it can extend it, that's it.
Human agency means.
Human agency means because company is an artificial person, it cannot operate by itself. The company needs somebody to operate in the name of company. For example, Success Academy is there. It cannot teach by itself. We are human, like an agent of the Success we are teaching here. So human agency means company has to definitely perform with the help of human agency because it cannot perform by itself. That's what human agency concept is. This is the company and its features. 1 7 marks question, 6 marks question, they can test it in the examination. Understood? The next thing which we proceed for discussion here is the types of company. Types of company. Whatever I feel it is important, I'll write it in the board. If not, I'll just discuss and I'll move forward. The first type of company which we already discussed is limited by shares, company limited by guarantee, and company unlimited company, in which 3 classification has happened. Next, very important from examination point of view is private company. So this is very hot topic for ICAI. Generally keeps on asking this content in almost all the majority of the examinations. So what is private company? As per 2/68, section number is important. 2/68 of Companies Act 2013. Private company means a company. As you know, there are 2 documents for a company, MOA and DOA. In articles of association, you should definitely mention the following points. So, I am fulfilling all the 3 points, but I did not mention in articles of association. Is it okay? No, it is not okay. You should compulsorily mention all those points in AOA. Then only you will be called as a private company. So, private company means as per 2/68 of Companies Act 2013. Company. Private company means a company by which its articles, that is AOA specifies 3 points. 3 points are restrict the transfer of shares. The second one first we'll write, then we'll explain. Prohibit the invitation to public to subscribe its own shares. It is prohibited to subscribe its own shares. And the third point, which is very important from examination, highest number of questions are tested on this third point is except OBC, except in case of OBC, the number of members are limited to 200. The number of members are limited to 200. So what do you mean by limited to 200? See, I am not telling company can have maximum 200 shares. I am telling maximum 200 members should be there. One member can hold 1000 shares, lakh shares, crore shares, it is up to them. 200 members. But however, the following persons are not considered for 200. The following persons are not considered for 200. First one is employees. Second one is not yours but ex-employees. Shareholders, that means when they were shareholder, whenever the employees they got the shares. Third one is joint shareholders. Joint shareholders are treated as single member or single shareholder. If you comply with all the 3 points, all the 3 main points, 1, 2, 3, we call it as private company. Private company. So it means a company by its articles restrict the right to transfer the shares. See, as we have maximum 200 members in a company, this private company is between a close group of people, generally close group, a family, maybe a relative, somebody. So because of which we kept minimum as 2 members. When there is a fighting between the family and one person want to sell it to some competitor or some other party, they are telling, yes, I am not telling you can't transfer. If you want to transfer, there is some restrictions. What is the restriction? Take the permission from all the existing members, then you can transfer the shares to the other party. There is the restriction. Take the permission, then transfer. Or there is second point is prohibition. Because it is a private company, you can't call the public. So what is private then? What is private then? Private is something where, say, public offer anyway foundation is not there, then you come to intermediate. In Companies Act also there is a chapter we call it as prospectus and issue of securities. Section 23 as well as section 42. Section 23 and section 42. So section 23 is talking about public offer. Section 42 is talking about private placement. Public offer means what? We generally issue a prospectus to everybody. If you have the money, you can purchase the shares. This is private. Private placement means as a company, I'll select, okay, you be my member, you be my member, you will be my member. If I select the people to be my members, it's called as private placement. That is allowed for a private company. You can't directly tell anybody, okay, if you have the money, you can be my member. That is not allowed. That is what they are telling. Prohibition and invitation to public to subscribe its own shares. That means simply they are trying to tell IPO, FPO or OFS is not permitted. Initial public offer, further public offer for sale. This is generally done for public. It is not permitted. Then the third one is except in case of OPC. Sir, why except in case of OPC? Because see, private company, if you ask me, there are 3 classifications I generally do. One is OPC, second one is small company, and others. So except this OPC, in these 2 things, private or the small company, the maximum number of members should be 200. The more than 200 members, it is called as deemed public company. Deemed, that means we are assuming it to a public company. So 200 members should be there, but while you are counting 200, if there are employee shareholders, don't count them. If there are ex-employee shareholders, don't count them. What do you mean by ex-employee shareholders? They were
previous
earlier employees because of which they got some shares in the company. If those people get purchase the shares in the market, then we don't call it as employee or ex-employee shareholders. They should get it by way of the company. You are working very hard, take some 10 shares, keep it. You are a shareholder, but employee shareholder. We are not considered as members. And if there are any giant shareholders, then we will consider as a single member. Even after the employment, that is considered. Because that is normal market condition only. Because whenever you are employing in the company, if you purchase also, it is not considered. You should get it from the company. That is what we call it as certificate shares, employee stock option plan. Those things are not considered here.
Sir, retirement.
No. That is pension. That is gratuity. That is separate. The ESOP and certificate shares are like you stay in the company for next 3 years, you will get 100 shares. You will get 200 shares. You work for extra Saturdays, you will get some 100 shares. Sweat equity shares. Because you put more sweat in the company, that's why you get some shares. You work hard for a company.
Yes.
You can sell.
Then it will be considered.
No. If the moment he sells, he is not a member, somebody else will become a member, then they will be called as shareholders. And there will be a locking period generally. 3 years locking period will be there. If you get if I tell I give the shares, you will have the shares in your account for 3 years, like part shares. 1 year completed, 30% share will come. Again 1 year completed, again 30%, 1 year completed, again 30%. You can't sell that for 3 years. After which you have to pay some amount of money to get entire shares, so that you can sell after 1 year. That means locking period plus exercise period is there. Much more.
4 years.
Generally 4, sometimes 3.5. Locking period is 3 years. Exercise period can be 3 months, 6 months, 1 year. It is up to the company. We'll not discuss so in detail because that is inter syllabus. We'll keep it here. Employees, ex-employees, and joint shareholders are treated as a single shareholder. Employees and ex-employees are excluded.
Sir, example, ex-employees ಅಂತ ಬಂದ್ರೆ marks ಬರುತ್ತೆ.
ಕೊಡ್ತಾರೆ. So this is private company definition. 2 bracket 68 says private company. So either there are 2 kinds of questions here on this private company. First kind of question is either they can ask define private company. Right, whatever we have written here, that's over. Or then give a case study kind of question. There's a company in which 130 members are there, others some 20 directors are there, 30 employee shareholders are there, 20 ex-employee shareholders are there, some 14 joint shareholders are there, 7 people holding 14 shares. Now add everything but exclude 3 people. Employees don't include, ex-employees don't include, joint shareholders if there are 14 treated as 7, if there are 20 treated as 10 because 2 people are there. Joint means you and me. So account is you might have done that in school when you are minor. You want your mom or you want your dad has single bank account, but account is single, but there are 2 members. So it is kind of same thing. 2 people are holding shares. After excluding all these things, if the still number of members are more than 200, then it can't be a private company. It has to be deemed public company. One very famous question which was asked here also as well as in India also is, there is a company which is public company, they want to convert into private company. The public company members are some 230 and that includes the list they have given. We will see the question after some time. So some employees are there, ex-employees, joint shareholders are also there. You will try to exclude them. Once you exclude totally, if it is still more than 200, then tell that if there is a need to reduce the number of members, remove few people, bring it up to 200, then you can convert into private company. After eliminating those members, if it is coming less than 200 or equal to 200, then no need to remove any members because anyway those people are not considered. That's the question which answer has to be written. That question we will see. This is a private company definition. So very important, highest important from examination point of view. One question specifically I am expecting for this attempt for 3 marks or maybe 4 marks is small company. 100% I am expecting this question for September 26. Because there is an amendment in the current amendment. So what is small company? It is told in 2 bracket 85. 2 bracket 85 of Companies Act 2013, which says 2 conditions. Small company means actually considered as 3 conditions. Consider as 3 conditions. One is it should be other than public company. First condition. Then some threshold condition are there. Threshold conditions. So what are the threshold conditions? The paid up capital of the company. Look at the language. It is they never use less than does not exceed 10 CR. Now this is amendment. Earlier it was 4 CR. Now they made it as 10 CR. The turnover of a company is does not exceed. Earlier it was 40 CR. Now they made it as 100 CR.
This should exceed 10 CR.
If it exceeds 10 CR, it is not a small company. We are telling what is small company. Small company means a company which is other than a public company, which has the paid up capital does not exceed 10 CR. This is and condition. And turnover does not exceed 100 CR. Then only this called as a small company. Don't write it in this chart format. Try to write it in a sentence format. Small company as per section 2 bracket 85 of Companies Act 2013, small company means a company which is other than public company and whose paid up capital does not exceed 100 CR and turnover does not exceed, paid up capital does not exceed 10 CR and turnover does not exceed 100 CR. So they'll give ABC Private Limited is there, paid up capital is 20 crores, turnover is some 70 crores. Is it eligible to be called a small company? We should write this definition, analyze the fact, then give the conclusion. The kind of questions can come. Generally, Definition kind of question can also come. I feel 20% of chance. 80% of the chances case study based question. They give one small company actual figures, then they'll ask you to check whether it is eligible for small company or not. That's the kind of question will come in small company. Then next, one more important kind of companies. Holding and subsidiary company. Holding and subsidiary company. Holding is not important, subsidiary is very important. So what is subsidiary company definition? Holding company, I never write, you will not remember also. Subsidiary company is given under 2 bracket 87. 2 bracket 87 of Companies Act says subsidiary company. Before we get into subsidiary company, first we will discuss what is holding company. Holding company is a company which has one or more subsidiaries. That's it. You are a parent who has one or more children. The similar way, holding company is a company which has one or more subsidiaries. It is a company which has one or more subsidiary companies. Which has one or more subsidiaries. This is the holding company definition. What is subsidiary company? That is very, very important here. Subsidiary company is a company. As per 2 bracket 87. Any of the two conditions have to be fulfilled. It is a company. I'm talking about subsidiary company. You are a subsidiary company in which other company that is called as holding company. You have to write it in sentence format only. Exam never use this charts. Holding company. Holds at least more than one half of voting power. More than 50%. More than one half means what? One half means more than 50% of the voting power. They specifically use the word voting power. You also use the same word voting power. In reality, voting power and share capital is same, but that is getting different because of the existence of some bigger company, differential voting rights company. We will keep it aside. That is again an intermediate concept. We will try to use the same word, voting power. Or this is not and this is our condition. Or it is a company in which other company controls the composition of board of directors. So what do you mean by controls the composition of board of directors? Control simply means more than 50%. What is composition? Composition means either it is appointment or removal. Simply who should be there in the board of directors of the company is decided by the holding company. If they can decide, for example, A Limited is there and B Limited is also there. Now, under B Limited there are 9 directors. What is more than 50% here for 9 directors? 5 directors. If A Limited can decide who 5 directors in a B Limited, who will be appointed or who will be removed with respect to 5 directors, then B Limited is called as subsidiary company, A Limited is called as holding company. First one is holds more than one half of the voting power. If you have not having any voting power, check whether you have a power to control the composition of board of directors. Sir, out of 9 directors, I can appoint only 2 directors. Will I be called as holding and will you be called as subsidiary? No, definitely not. Your own person is there, that's it. So more than 50% of voting power or more than 50% of composition of board of directors. Out of these 2 points, any point is fulfilled, then you will be called as a subsidiary company. You are a company in which holding company is holding more than 50% or control the composition of board of directors. Very, very important point. Content this also can be tested. Then comes uh, fourth one. Associate company. Associate company. What is the section number? 2 bracket 6 of Companies Act 2013. So associate company. Sir, you are telling more than 50% would be held by one company. In your company, then your subsidiary and other person is holding. But if somebody is holding less than 50, then is it have any relevance? As for holding subsidiary, no relevance. But associate company says associate company is a company in which other company has significant influence. Other company has significant influence. So what is significant influence? Holding at least 20% of voting power or share capital, both are same. At least 20%. Look at the language, very, very important. In subsidiary company, more than 50 should be there, compulsory. Actually, exact 50, not holding in subsidiary. But here, at least 20%. What do you mean by at least 20? More than or equal to, both are considered. Equal to 20 is also called as associate company. So, you are telling other company. Which is this other company? We call this as investor company. If you are holding 20 or more than 20 in my company, you are investor, I am associate company. I am associated to you. And it includes joint venture also. Associate company includes joint venture also. So what is joint venture? Joint venture is a venture in which, for example, A and B put together in C Limited holding 50% and 50%. This is called a joint venture. C is joint venture, A and B are called as investor companies. So associate company is a company in which other company having significant influence, and it includes joint venture also. Significant influence means having at least 20% of the voting power or share capital. Joint venture means 50% by two companies. This is associate company. The next important company is government company. It is 2 bracket 45. 2 bracket 45 of Companies Act 2013, which says it is a company in which either central government or state government or central government with state government or state governments or central government with state governments. No, same idea. Here, one center, one state. Here, one center, many states.
Governments.
Many governments. For example, central government and Tamil Nadu, Karnataka, Maharashtra government, everything put together. Here I told Karnataka and central government and Karnataka. Or it is entirely central government, or it is entirely Karnataka. Or Karnataka, Maharashtra, Tamil Nadu, only state governments. Or central government plus multiple state governments. Holding. Not less than 51% of total share capital. Here the wordings are very clear. Here the voting power is not used. Here the wordings used the share capital. Not less than 51%. What do you mean by not less than 51%? More than or equal to 51 is also allowed here. Equal to 51 is also allowed. So, government company is a company in which not less than 51% of the share capital is held by central government, state government, center with the state governments, etc. And it includes subsidiary company of government company also. Subsidiary company of government company also. So what is this subsidiary company of government company means? Subsidiary company of government company means See, subsidiary definition is very clear. What the subsidiary definition says? More than 50% is called as subsidiary. If you remember the earlier definition which we discussed. But for the purpose of becoming government company, 51 is required. So, this is also examination case based question. They will ask central government, Karnataka government, and Maharashtra government in AB Limited holding 20 percentage, and 20%. Now, what is the total percentage held by them? 60%. Is it more than or equal to 51%? Then A Limited is called as government company. A Limited is a government company. If this company holds in B X Limited some 50.5% also. Don't see this above part. Leave it aside. AB Limited is holding 50.5%. Is it more than 50%? Then X is a subsidiary company, A is a holding company. Yes, that is normal. Because A Limited is a holding company, okay. Because it is already a government company. This subsidiary company is also called as government company. This is called as government company definition. Government company means a company in which at least 51% is held by CG, SG, CG with SG, SGs and CG with SGs. We call it as government group. Share capital, total share capital, and it also includes subsidiary company of a government company also. This is government company definition. So we discussed what is company, features of the company, and we started with the types of company. Limited by shares, guarantee, unlimited company, holding subsidiary, private company, then associate company and government company. Then so again we continue. The next type of company which is again important is one-person company. So the next company is one-person company. So what is one-person company? It can be again 4-5 marks question also. So 1% company, what is the section number? 2 plus 62. Of companies Act says 1% company means a company in which there is only one member, minimum one member, maximum one member. So in which there is only minimum and maximum members are 1. Minimum and maximum members are 1. And whenever you are supposed to become a member here, there are some conditions which have to be fulfilled, and the conditions are very important from examination point of view. So what are those two other conditions? Earlier there were 3 conditions, now it is only having 2 conditions. You should be a natural person, as well as you should be an Indian citizen. Only a natural person like you and me, who is Indian citizen. Who is Indian citizen? Who is born and brought up in India. Who is born in India is called as Indian citizen. So if we are fulfilling both the conditions, sir, I am natural, but I am not Indian citizen. No, I don't care. You are not eligible to become a create one OBC. That's what it is there. So a natural person who is Indian citizen. Earlier the condition was resident. Now the resident is removed. They remove the resident now. So can form OBC. Can form OBC. Now, when there is only a single member in a company, what if something happens to that member? There should be somebody there. Because of which Companies Act says that you should always again appoint somebody called as nominee. So who is a nominee? Nominee is a person who is in the event of the death of the member of a company will be taking charge of the company. Who will run the company. So nominee also there are some conditions. Same thing. He should also be a natural person and he should also be an Indian citizen. Nominee should also be national and person will be Indian citizen. And before you appoint a nominee, obtain a written consent whether he is interested in becoming a nominee of the company or not. 1% company. If he does not give a consent, then you can't appoint a person as nominee. The moment you obtain a consent, within 30 days you have to file that consent with ROC. So, more important than that is the written consent and a person can be member in only one OPC, that means maximum number of OPC can be a member is one, and it can be a nominee in only one OPC. That means if you are already a member of one OPC, then you can't form one more OPC. If you are already a nominee of one OPC, then you can't be nominee of one more OPC. So, but can I be a member of one OPC and nominee of another OPC? Yes, that is possible. But the moment, consider there is a private limited OPC is there and B is also there, first one and second one. Now, Mr. A is a member here. Mr. A is a member. Mr. A is a nominee here. Who is a member in B? Consider B is a member here. If the B dies, then nominee should become a member. Once a nominee becomes, who will become a member? A. Already A is a member here. Within a period of 180 days, not 180 days, sorry. Within a period of 60 days, the A should choose which OPC he will be a member and he should resign the other OPC. Because maximum, as we know, he can be a member in only one OPC, he can't be a member in two OPC. So, because of which, he should resign maybe A or B, then he can continue. So, how can he resign? Appoint somebody, person C, then he can resign from the membership of the OPC. This is one person company. So, again, there is two more points also. There are two more points also. Now, audio video clear online? Can you hear me? Okay. So, this is with respect to 1% company. Now, the next company which we have to discuss is Section 8 company. Section 8 company. Actually, name of the company is not Section 8. Name of the company is non-profit organization. Non-profit organization or charitable organization. But here, because it is given under Section 8 of the Companies Act, we call it as Section 8 company. So, what is Section 8? As the name itself says, it is Section 8 of Companies Act 2013. Where non-profit organization, see, as we know, the primary mode of every business is always profit making. And if you are a profit making company, then you don't need any exemptions with respect to taxation. But the moment you are a non-profit organization which is working for the promotion of art, science, culture, religion, sports, anything, then government is trying to tell that, okay, we will give you some exemptions. But whenever you want to claim such exemptions, definitely, first of all, you should get registered to obtain a special license from central government. So, before you register yourself as a company, first make an application to central government to obtain a special license. Once you get a special license, using that special license, go to ROC and ROC will register your company immediately as a Section 8 company. So, here the primary purpose is, primary procedure is first obtain special license from central government, obtain special license from central government and file license this permission along with other documents. So what are the other documents we discussed in Section 7, MOA, AOA declarations. Then you will register as Section 8 companies being come into existence. Section 8 company has been registered. Now, the important point is, for example, if I tell my Purpose of Section 8 companies giving the free education. I told government I want to give free education, please give me a special license, Section 8 license. I took the license, special license, and I started giving the classes for free everywhere. But because I became greedy, from like 2 years later, I started charging fees 10,000, 20,000, 10,000. Whatever the objective I was established, that objective is violated now. In that case, central government has an option to revoke the license which is given by the central government. Once the license is revoked, that means you are no longer a special company. Then ROC will immediately add the word limited, private limited, etc. in your name. And if you have done some fraudulent activities, the tribunal also has an option to what? Wind up the company, declare the members' liability as unlimited, and merge with some other company, transfer the asset, sell the asset, and transfer the money to some other company. Some punishments it can give. So, two important things. What is Section 8 company? That licensing procedure is also important. One specific 3 marks important question is the punishment. Punishment either giving wrong information or violation of objectives of the incorporated company. This is Section 8 company. File the permission, special permission with and other documents with ROC. This is Section 8 company. What are other companies? Simple companies are also there. Again, one more important company is government company. What is the section?
455.
Section 455 is a government company. So, what is government company? A company. Government company is a company in which is a company which does not have any significant accounting transactions in the company, and it also includes inactive company. So, what is significant accounting transaction? This point is important. Either they'll ask government company definition, or they'll ask what are not significant accounting transactions. What is significant accounting transactions? Every transaction is significant accounting except 1, 2, 3 and 4. 4 transactions. Except these 4 transactions, every transaction is a significant accounting transaction. The first one is payment of fees to ROC to comply with the act. Then second one is payment of fees under any act, for example GST, etc. Maintenance of office and records, and issue of shares to comply with Companies Act. These are the 4 transactions which are not considered as significant accounting transactions, except this for everything is SAT, significant accounting transactions. This is government company. Then next company is listed company. What is listed company? The company which has listed, any of its securities in the recognized stock exchange. Where is it listed? It is listed in any of the RSC. Any RSC, recognized stock exchange. So what are recognized stock exchanges? There are 2 things. One is Bombay Stock Exchange, second one is National Stock Exchange. These are the only 2 stock exchanges which are recognized in India. If you register any of your securities here, then you are a listed company. Exactly opposite to that is unlisted company. So what is unlisted company? Other than listed is called as unlisted company. Other than listed company is an unlisted company. What are the next other types of company? Maybe okay, you can create for income. This is also very important. 2/42. Foreign company 2/42. What does foreign company says? Foreign company is a company which is incorporated outside India. What is incorporated outside India? It is having main head office in outside India and plus having place of business in India. Incorporated outside India and having place of business in India. So how they are having place of business? Either it can be physical also or it can be electronic also. Either by themselves or by any agent. If you have this kind of company, it will be called as foreign company. Foreign company is a company which is incorporated or registered outside India and having a place of business in India, either by itself or by agent, physically or electronically. This is foreign company. This is also important. Market is important. I should have discussed earlier. That is after incorporation. If you don't do activities, if you don't file annual returns or financial statements for 2 years, then you are inactive company. Plus, 4 transactions should be there. Should not be there. This is foreign company. Any other company which was there? This is about Tamil Nadu, 14, 19. Public financial institutions. Some 3 things are there. Unit Trust of India. So 6. You remember? PFI. You remember? Then, concentrate with respect to companies. They are the important companies which are discussed. We'll discuss that concept separately. Types of company. So these are the types of company. Sure. Nidhi company you can trade. There is nothing in Nidhi company. Public company is a company which is other than private company and which has minimum paid up share capital as prescribed. So that's it with respect to types of company. We'll get into the next point. That is corporate wheel theory. See, actually, this corporate wheel is nothing but separate legal entity. It is nothing but separate legal entity under which it is given. This theory has come because of which case? Case study. You remember? Salomon versus Salomon Limited. So under which, you remember the case? He transferred his business to company.
He gave like one share to his
4 daughters, 1 son, etc. etc. That story. I am not repeating the story. Corporate will be means where members are treated as separate from company. This is what we call it as corporate will. But because members are treated as separate from the company, and there is one more point called as company will always act by a human agency. That means company cannot do anything by itself. It needs the help of the public for the purpose of members for the purpose of building. Now, there is one more connected concept to this corporate big theory that we call it as lifting of corporate trade. Lifting of corporate weight. So, what do you mean by lifting of corporate weight? This is important. 7 marks question they can test directly in the examination. So it is like this is a company. This is a company. And consider there are some members. And there is one parda between them. There is a veil that the ladies wear the veil. So, because there is this concept, this company and members are treated separate because of this veil. But you tell me, because the company will definitely need to act with a human agency, there is a possibility that these people can misuse the company name. So whenever somebody try to misuse the company name, whenever try to take advantage of the company because of a separate legal entity, the court will do what? Court will lift the corporate veil. And the moment they lift the corporate veil, they treat company and members same. For all the acts of the company, members are liable. For all the acts of the member, company is also liable. Whenever the members are trying to take misuse the company form of corporation because of the separate legal entity. There are certain cases where corporate veil will be lifted. Corporate veil will be lifted. The first case which was there here is
To determine the character.
to determine the character of the company. The character. To determine the character of the company. So what type of character we are trying to determine? Whether the company is a friend company or enemy company. Whether your friend company is a friend company or enemy company. So when it is called as friend and when it is called as enemy, a company is always a friend company except in only one situation. That is, whenever you are having your country is having war with some other country and you are trading with that country's company, then the other country's company is called as enemy company. When the war is going on, you are restricted or you are prohibited from making any payment to that company and receive any payment from that company. All the transactions, payments, everything has to be stopped. To check whether you are an enemy company or friendly company, we will lift the corporate veil. After lifting the corporate veil, if there is any indirect control from the other country's company also, etc., then also it is treated as same company. Corporate veil lifted, then this is what was the case which was there here? Continental Tires and Rubbers Limited versus Daimler Company Limited. Daimler Company. Huh? 1%.
Should we remember the case?
Should you?
Remember the case.
If you can, if you can, you can. If not, no need. No, they will not be the marks. Concept is important. Point has to remember to determine the character of the company, but this case is up to you.
So circumstances will be 7 case law.
That they tell any other case where the court feels fit, they lift it.
For example, one of the question will be asked. For example, out of 7 case law.
Okay, yeah, okay. Will it be asked as a single question or will it be asked as a separate question in examination? Generally, there are 2 points that mainly the tax evasion part, Dinshamaniji patent case. The next to protect the revenue or tax that can be asked as separate. Or else they directly ask some members are trying to defraud the company. Can a corporate bill be lifted? Explain the cases where the corporate bill will be lifted. You have to write all the points. Then second question is, second case where we lift this to protect tax or revenue. To protect the tax or revenue. So what is to protect the tax or revenue? Whenever somebody trying to take the advantage of the company because of the separate legal entity, then company will court will lift the corporate bill and treat the company and members same. Then whatever the income that is transferred to the company, even though there is a separate legal entity, they will treat both the same and it will be taxed in the hand of members. It is given in the case called as Dinshamaniji Petit and Jugila versus Commission of Income Tax. Dinshamaniji Petit. What did Dinshamaniji Petit do is, actually the income which is received from multiple companies for DMP, Dinshamaniji Petit. For example, if it is receiving 10 CR, it was actually taxable at some slab rate. For simplicity, we will keep it as 30%. So 3 crore rupees he has to pay as tax. To avoid this tax, what he did is, he formed some A private limited and B private limited and C private limited, etc. Then he told pay all the income to the other companies. That means he did not receive a single rupee of income. When he did not receive any income, then there is no tax in his hand. And because these companies are there, there are some exemptions of company, because of which these companies are also not paying any tax. So to protect this tax or revenue, court will lift the corporate bill and treat A and DMP, B and DMP, and C and DMP as a single person, and the amount will be taxable in the hands of the examination patent. This is to protect the tax of revenue. Then the next case which was there is to avoid legal obligation. To avoid the legal obligation. So what do you mean by to avoid the legal obligation? Whenever company is trying to avoid any legal obligation which is supposed to be done, then courts will lift the corporate bill and treat one company and the other company same, and it will be tax charges. They try to provide that whatever obligation they are trying to avoid, it is to the people. The case is Bhavanagar Industries Limited versus Bhavanagar Workmen's of Bhavanagar Industries Limited. What did happen here? Under this Bhavanagar Industries Limited, the company has promised some bonuses for the employees if they exceed some profit. They actually exceeded the profit. When the profit was exceeded, the company diverted the entire profit to some other company, some subsidiary, some other company, stating we don't have any extra profit. Because of which everybody went to the court treated. Okay, that subsidiary and new company, is it same? If the corporate will for the purpose of avoiding the legal obligation only you form that company, then it is taxable. Not taxable, you have to give the bonuses for the people. That is Bhavanagar Industries Limited versus Bhavanagar Industries Workmen's of Bill Limited. There is the third case. To determine the character of the company, friendly company or enemy company, then to protect the tax and revenue, then to avoid the legal obligation. Then fourth case is subsidiary firm for improper conduct. What is other than improper conduct? Company formed for the purpose of fraud or improper conduct. What was the case which was there here? It is British Transportation. What is this? British Transport Commission versus Mercantile Transport Limited. So what happened? This Mercantile Transport Limited actually bought some vehicles which has to be registered with the BTC is like RTO in India. So which has to be registered with that BTC, but the BTC has rejected the registration for those vehicles, stating that this is not as per compliance some reason. Later what they did is MTL formed one other subsidiary company, for example X Private Limited, and whatever the buses are there, they transferred to this X Private Limited, and this X Private Limited went to the BTC stating, sir please give us the registration. Then BTC thought same buses only came. Then X Private Limited says no sir, MTL separate company, separate entity, X Private Limited is also separate. Then courts are okay, give the corporate. Why did you create this X Private Limited? Any business there? No, only to get the license. Then both are same. Avoid the license given for the company itself. And the last one which we have is that is formation of subsidiary. Formation of subsidiary for improper conduct or fraud. Here it is.
Subsidiaries to act as agents.
That is this one. Subsidiary. Okay. Subsidiary formed for acting as agent. Subsidiary formed for acting as agent. Here it is company formed for improper conduct. Company formed for improper conduct. It is, the case is what is Guilford Motors. Guilford Motors versus in which Harvey was a employee which happened to be employee when they had something called as non-compete agreement. Non-compete agreement means whenever you leave the employment, you should not take my existing clients. That's what this Guilford Motors told. Then this Harvey told, okay, I will not take, but he started on some ex private limited, and he started taking the clients from this Guilford Motors to ex private limited. When the court asked, why, like when this Guilford Motors asked why you are doing this, then this Harvey told, no, ex private limited is a separate legal entity, and I am a separate person. Then it went to the court, no, why did you form this only for the purpose of acquiring the clients? Then both are same. We will leave the corporate well, and you are disregarded with respect to acquisition of clients. Corporate way, then lifting of corporate way. So we discussed company features, corporate way theory, and types of companies. So 1 or 2 questions around some 7-8 marks we covered it now. 8 marks, 8 to 10. We can keep it as 8 to 10 marks, which is important. Then again, the next concept, which we will discuss, the next concept is MOA and AOA, Memorandum of Association and Articles of Association. So, what is Memorandum of Association and Articles of Association? These are the 2 documents. These are the 2 primary documents which every company has to file with ROC to get its incorporation, to get it incorporated. So these MOA and AOA, Memorandum of Association and Articles of Association, are also called as charter of the company. What is charter of the company? These are like supreme documents. Supreme documents. These are the ultimate documents. ಇದಕ್ಕಿಂತ ಜಾಸ್ತಿ ಏನೂ ಇಲ್ಲ ಕಂಪನಿಗೆ within the company. So when I say this charter of the company, Memorandum of Association also should contain certain clauses, and Articles of Association should contain some clauses. The first we will discuss Memorandum of Association. So Memorandum of Association. Memorandum of Association is a kind of document which is very, very important, which shows the relationship between the outsiders and the company. Outsiders and the company. Because if you remember section 399, which we will discuss in Document of Constructive Notice later, any person who is entering into the contract with the company should have the knowledge of MOA and AOA, because which are public documents. So because it shows the relationship between outsiders and company. And this MOA has how many clauses? 6 clauses. First clause is name clause. Second one is registered officer situation. Registered office clause. The third one is object clause. The fourth one is liability clause, and the fifth one is, and the sixth one is association clause. However, for OPC, there will be an extra clause, that is nomination clause. Only for this is applicable only for OPC. All the companies, this nomination will not be there. So what does the name clause speaks about? Name clause is just talking about the nature of the company, which kind of company you are. If you are a public company, then your name should end with limited. But if you are a private company, your name should end with private limited, P limited or private limited. Anything can be there. But if you are a OPC, 1% company, then your name should end with private limited OPC or private limited 1% company. You can write either the abbreviation or you can write the full form also. But if you are a Section 8 company, You don't need to add this limited, private limited, all those things. You can directly use association, club, association, club, chamber of commerce, etc. These are the names that you can use in case of a section 8 company. Name clause talks about what kind of company you are. If you are a private limited company, the moment you look into some company name, if it is ending with private limited, it is a private limited company. If it is ending with just limited or LTD, both same abbreviation or full form, that is public limited company. If it is ending with private limited OBC, one person, if not, chamber of commerce, association, or club, etc. This is called as section 8 company. And the name situation clause or registered office clause is talking about the company should mention in MOA second clause the state name where this has been situated. If you are situated here in Baswantagudi, then you have to, instead of stating entirely second class Tata Steel from Southern Road, no nonsense is not required. You can just tell the successor private limited is situated in the state of Karnataka. That's over. Every state name of the company, situation clause of the company should end with the name of the state. Nothing else. Then comes object clause. Object clause is having two parts. One is the main objective. Second one is incidental or ancillary. Incidental or ancillary. So what is the main objective? The main objective which specifically states the main purpose of the company. Main purpose of the company. For example, we are here having considered successor which is a private limited company. It is actually not considered as a private limited company. Now, what is our main objective? To give the coaching center, coaching, CA CMA ICAI, everything. We have to give the coaching. So the main objective should always consist of something which says the objective of the company is to impart the coaching for CA CMA with respect to all the levels. That is the main objective. But here we have laptop also, camera also, TV also, dias also, bottle also, chair, table, everything. Buying the TV, laptop is not my objective. But for the purpose of effective achieving of main objective, we need some ancillary objective. We need some supporting objectives. Those are called as ancillary, incidental, or supporting objectives. So this main objective generally is in many companies. So some 2 to 4 objectives will be there. But when it comes to incidental objective, to support that, for example, we need money for running the classes. So we go to a bank, raise the money by way of loan. That is also incidental objective. So why is it important to write everything? Yes, because anything which is not there in MOA, a company cannot do it. That is what very, very important. If you want to do something, anything, write it in MOA or AOA. It is compulsory. These are supporting objectives. Supporting to main. One is main objective, second one is incidental or ancillary objective, which is supporting to the main objective. Then comes liability clause. So what is liability? Is it liability of company or is it liability of members? It is a liability of members. What liability does the members have? Members have limited liability. Yes, that is what is there, liability clause. What you should mention in the liability clause? You should just state that the liability of members are limited. Over. If you want, you can extend it and tell that to the extent of unpaid up capital of the unpaid up value of the share capital held by the people. It is limited liability to the extent of unpaid up value. Unpaid up value of share capital held. Unpaid up value of the share capital held. That is called as liability clause. Again, if you are a guarantee company, then you should state that liability of the members is limited to the guaranteed amount. With unlimited company, liability of the members is unlimited. You have to tell everything. Now comes capital clause. What should capital clause consist? This capital clause should consist of authorized share capital. What is authorized share capital? First of all, this is a capital which a company can raise at the maximum level. This is the maximum level of capital that a company can raise in its entire life. Now, whenever you are writing this authorized share capital, you should also mention 3 things there. You should also mention 3 things. The first one is you should tell number of shares. How many number of shares you are issued? What is the face value of the shares? And what is the total capital or paid up capital? So it is nothing but number of shares into face value it is there. So every capital class should consist of all these details. Number of shares, face value and total capital. Then lastly we have is association clause, in which we have to write all the name of the members who has agreed to become a member at the time of incorporation of a company. Later you become a member, you are not part of association. Only the promoters will be there here. Promoters of the company, association, in which you have to mention the name of the members, then address, then number of shares taken, then sign of the member should also be there, plus one witness, sign and address. Witness, sign and address also should be there. So association clause is the people who are agreed to become members of the company at the time of incorporation, and they should mention name, address, number of shares taken, signature they should sign, and a witness also should sign the incorporation document. For OPC nomination, it should contain who is the nominee, whether he is Indian citizen or not, whether he is a natural person or not. That has to be there in OPC nomination clause. This is memorandum of association. After which there is something called as articles of association. Sorry, as we had 6 clauses in memorandum of association, in AOA also there are only 6 clauses. No, AOA consists of infinite clauses. You can add 1, you can add 100, you can add 500, you can add 1000 also. So, if you look at MOA, we had name, we had objective, we have situation, we had capital, we had liability and association. These are the 6 clauses. But anything which is required for the purpose of running the business, but which is not there in MOA, all those things have to be written in articles of association. It is a residual clause. It is a residual. For example, conducting of AGM, annual general meeting. When can you conduct? Yes, it has to be written in AOA. Appointment of a director, appointment of an auditor, remuneration to director, opening of a new branch, closing of an existing, everything, whatever it is they want to do, not there in MOA, write it in AOA. There are 94 model clauses. That means some clauses they have given 94 clauses. If they want, they can use this. If not, they can write 10, 20, whatever they want, they can write it. That is articles of association. Articles of association is very simple document. So here MOA is given in section 4 and AOA is given under section 5 of Companies Act. Section 4 is MOA, section 5 is AOA, articles of association. Memorandum as well as articles of association. After MOA, AOA, what is there? Doctrines. We'll discuss the doctrine later then. Okay, we'll discuss. Promoter. Also important. Who is promoter? As per 2/69 of Companies Act. As per 2/69 of Companies Act. See, simply a promoter means a person who starts a company. Who gets the idea to start the company? Or as per whose instruction the company is compulsory required to act. See, when your father tells something, can you reject it? You have to definitely follow. The promoter is like the father of the company. He is the person who brought the thing into existence. Promoter is a person who, according to whose instruction, the company is accustomed to act. And the person who is named in the annual returns are what is this one more? Prospectus of the company is called as promoter. Not important. It is actually an inter-concept. And you can read the promoters. What else we have? Doctrines we have. Incorporation of company we have to discuss. Then formation also we have to discuss. Section 3. What is section 3? That is formation. Formation of company. So what is formation of company? Formation of company means how can you start a company? It is not the legal procedure. It is the requirement, minimum requirement of a company. So a company can be formed for any lawful purpose. A company can be formed for any lawful purposes with 7 or more in case of public company, with 2 or more in case of private company, with 1 person in case of focus. This is what section 3 formation of company is talking about. No, 7 or more in case of public company, 2 or more in case of private company, and 1 with 1 member in case of 1 person company. This section 3, 4, 5, 4, 6. Okay. Now we have doctrines. After doctrines, we have incorporation. Then entrenchment. Okay, we'll discuss. That anyway we discussed. I can write it. Write that separately. That is incorporation procedure only. So we continue. The next concept, as we told, it is capital and shares. What do you mean by the word capital?
Money invested
Money invested by the members of the company. Members of the company is called as capital. See, capital is a combination of 2 things. One is the paid up value, which is being paid by the members of the company, and number of shares that have been taken by them. So capital is nothing but amount introduced into the business. Now there are 5 kinds of capital which are important from examination angle. So what are those 5 kinds of capital? First one is authorized share capital, or issued capital, or subscribed capital, or called up capital, and paid up capital. Paid up capital. So what is authorized share capital? Authorized share capital is a capital which a company can raise maximum in its entire lifetime. Is called as authorized share capital. So it is the maximum amount it can raise in its lifetime. For example, if I tell 1000 shares into 10 each, that is 10,000. That means at this point of time they can raise maximum 10,000. If they want to go more than 10,000, amend the capital plus authorized share capital, then you can increase it to 1 lakh, 2 lakh, anything whatever you want. Then you can raise extra money. So it is the amount of money that a company can raise maximum in its lifetime. It's called as authorized share capital. So consider, as I told, 10,000 into 10 is equal to 1 lakh rupees worth of authorized share capital company wanted to raise. But out of the entire 1 lakh, company decided, no, I don't want 1 lakh rupees today. I need only 50,000 for the purpose of continuing the business. That's why what I did is I have issued 5,000 shares of 10 each, so that I can raise 50,000 rupees. What is issued capital? Issued capital is a capital which is part of authorized share capital and which is issued to the public for subscription. Out of 50,000 rupees of capital or 5,000 shares, the public, if it subscribes the entire 100%, the subscribed capital also will remain 5,000 into 10, that is 50,000. But if they subscribe 4,900 shares, 4,800 shares, then subscribed capital will be less than that. It is simply that issued capital, either it will be equals to or less than authorized share capital. It can't be more than that. Subscribed capital also should be maximum of issued or less than that issued. That's the maximum thing. Out of 50,000, company also thought, yes, I want 50,000 in this year, but I don't want entire 50,000 rupees today itself. On the day one, I don't want 50. Yes, in the current full financial year, I need 50. But in this today, for example, for the first 3 months, I need only 25,000 rupees. That is why what company did is, company has called 5,000 shares, 5 rupees each instead of 10 rupees. The called up capital. So then we receive 25,000, out of which if the members pay entire money, that is called as paid up. If few people like calls in arrears, people did not pay, if there is any kind of thing, that is called as unpaid up capital. Consider if every money is paid, then 5 to 5, that is 25,000 rupees. If you see mainly, first 3 parts, authorized, issued and subscribed, it is talking about number of shares that is being issued. But when it comes to called up and paid up capital, it is talking about the amount of money that is being raised. 5 rupees, 10 rupees, 6 rupees, 7 rupees, that is what it is being raised here. So capital is a capital which is introduced by the members of the company. So there are 5 types of capital: authorized, issued, subscribed, called up and paid up capital. So authorized is a capital which a company can raise maximum in its entire lifetime. Issued is out of the authorized share capital, how many shares are being issued. Subscribed is how many shares are being subscribed by the public. Issued is from the company perspective. Subscribed is from the shareholders perspective. Called up is again from the company perspective, how much money per share it is calling and how much money per share that is being paid by the members. That is from shareholders perspective. Now when it comes to the shares, next answer. What is share? Share is the share in the share capital of a company. Out of the total capital, if you take one part, that is called a share. Out of 50,000, out of this entire 50,000, if you take 5,000 shares, if you take first share, if you take second share, this individual level is called as shares. Shares is the share in the share capital of a company. Shares is the share in the share capital of a company. Share capital of a company. Now, how many kinds of shares are there? There are 2 kinds of shares. One is equity shares, second one is preference shares. Equity shares and preference shares. So, what is equity shares? What is preference shares? First, we will discuss preference shares. Preference shares are those shares. Preference shares are those shares which has 2 preferences over the other shares. If you compare it to the equity shares, I have as a preference 2 rights. So what are those 2 preferences? The first preference and the second preference. First preference is on the right to payment of dividend. Not right, I will write it as preference. Preference to payment of dividend. That means whenever the company pays the dividend, company can pay dividend to equity shareholders also, company can pay dividend to everybody also. But before you pay it to equity shareholders, give first preference for preference shareholders. This is the first preference we have. Preference over payment of dividend. Second one is preference over repayment of capital. Preference over repayment of capital. So what do you mean by preference over repayment of capital? Whenever the company is in liquidation or winding up, it is paying the outsiders, insiders, everything. But before you pay equity share capital to the equity shareholders, first pay my capital to the preference shareholder. That is called as preference or repayment of capital. If you look at the words, it is payment, it is repayment. Because dividend is paid by the company, the capital is repaid by the company. So first preference for dividend is mine, first preference for repayment of capital is mine. That's what it is there. Two preferences. What is equity shares? Other than preference shares are called as equity shares, which does not have any rights. Now here, whenever the dividend is being paid in equity preference shares, it is at the fixed percentage or fixed amount. Fixed percentage or fixed amount. What is fixed percentage? Whenever the shares are being issued, preference shares, the percentage is already fixed. 10% preference share, 8% preference share, 12%. That means that's the only percentage that get it as return. But equity shares are like variable. It depends. Changes every time. If you, I don't remember the company name. Last month only, July month only, somebody declared 5,000% of dividend. 5,000. No, dividend is always paid on face value. Face value is 10 rupees or 5 rupees. Market value may be some 1,000, 2,000. That's okay. But on 10 rupees, they give 5,000%. Around 50 rupees is a dividend for every share. So I don't remember which company. Recently, last month only they declared 5,000% of dividend. One thing which I remember is TCS also they declared 5,000%. Tata Consultancy, not now, some 5-6 years back. So equity shares are the ultimate owners. They get extra dividend. Sometimes they get no dividend. Sometimes they get less dividend. It is up to the company profitability. If the company has more profit, they get more dividend. If the company has no profit, no dividend. Less profit, less dividend. It is the company part. Shares and capital. Share capital. Now there was one more provision which he asked is entrenchment. So what is entrenchment? We will discuss something called as ordinary resolution, special resolution. You remember? Okay. Anyway, yesterday only I completed CA CMA. There also same law we discussed here. What is over, what is lesser, I will discuss. For example, company is an artificial person. You try to understand this concept. Who is the owner of the company? Shareholders, specifically equity shareholders are the owners of the company. When equity shareholders are the owners of the company, now, okay, who will run the company? Who will manage the company? Board of directors will manage the company. If consider, for example, equity shareholders are different and board of directors are also different people. Now they run the company. This board of directors decided that we will buy one more company. For example, A Limited want to buy B Limited. Now, when you want to buy using owner's money, you should take the owner's permission. Now, whenever the owner's permission should be taken, how do they give the permission? We call it as by passing a resolution. What is the resolution? For example, in Parliament also you might have seen how many of you are against the bill, they do this, how many yes, how many no. In Parliament they do it. That's what I meant. You have seen that Parliament discussion, in any discussion in Parliament, they'll tell, whenever their party leader tells something, they're very happy, they'll ban the bench. If other parties say something, they'll walk out of the house, etc. So similar way, the members of the company will pass a resolution. Resolution is a decision. Resolution is nothing but decision. So how many kinds of resolutions are there? There are mainly two kinds of resolution. One is OR, second one is SR. Or the ordinary resolution and special resolution. For simple matters. Generally company will take OR. For very special matter, critical matter, very important matters, company will go for special resolution. Technically that is so different, but I will tell it in a simple language. If you get more than 50% vote as yes compared to no, it is said to be OR has been passed. Ordinary resolution has been passed. For example, 100 people are voted in a meeting. If 20 is no, if 20 is no, if 21 is yes, then it is said to be OR has been passed. Don't take 51% of this unread. How many people have voted? Only you should take that. Okay, here I wrote 100 is members. Only 41 voted. Out of which majority is this thing. Simply whatever the no you get, more than that no you should get yes. The votes casted in favor is more than the votes casted against the resolution. At least 50% of, or more than 50% should be there. So what is special resolution? Same, but more than or equal to 75%. For special matters, like removal of an auditor, removal of a director, they are special matters. So if simple matter OR is sufficient, more than 50%. If not, yes sir, more than or equal to 75%. Along with that, there is one more thing we call that as entrenchment. Entrenchment. So what is entrenchment? Not given specifically, and like general usage is more than or equal to 95% voting, which is much more stricter than special resolution. For example, we want to amend the articles of association, or we want to amend the memorandum of association. Then you should take the permission from so many people. Then you should pass an entrenchment. Entrenchment is a provision which is much more stricter than special resolution, which are taken only for very fundamental matters. Company is now into coaching business. Now it want to get into construction business. Object is changing. We'll go for entrenchment. Almost kind of thing. SR is also okay. Entrenchment is also okay. Entrenchment is applicable only when it is mentioned in AOA. For example, AOA has 10 clauses 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And the 11th clause says, whenever company wants to alter clause 4, clause 7, and clause 10, they should pass entrenchment. Then for this matter alteration, you should go for more than or equal to 95%, whatever the percentage they specified. 97, 98, 99, 100 also it is possible. It's up to the company. That is what we call as entrenchment. Entrenchment is much more stricter provision than the special resolution, in which more 90, 95, 98, 99% of kind of thing will be there. And that power to pass an entrenchment should be given under articles of association. If the AOA has no power to pass entrenchment, then no entrenchment will be there. For example, I'll give one example. Fourth clause contains what? I am a company who has taken loan from SBI. How much? My turnover is 100 CR. I have taken 50 CR loan. That means 50% of my company is SBI only. Now I will run the company. SBI has just given a loan. SBI has a fear that what if I can't run the company properly. That's why SBI says if you want to change the objective, you should come and ask me. That asking itself is entrenchment. If I don't say yes, then you can't do that. Very stricter provisions. Many of the companies will not have this. Only in case of a low kind of provision, this will be there. If not, generally they will avoid it. This is entrenchment. And the last concept which we have is from this Companies Act, doctrines. Sorry, incorporation is also there. First we will discuss incorporation, then we will go to entrenchment. This is section 7 of Companies Act. Incorporation. Sir, what do you mean by the word incorporation? What is the difference between formation and incorporation? Formation is like what is the minimum requirement or eligibility to start a company. Formation is how do you bring the company into existence? What is the procedures? What is the rules? What is the regulations? What are the steps that you have to take care with respect to bringing the company into existence? Section 7 incorporation talks about. Section 7 incorporation talks about. A company can be brought into existence by the following procedure. First, whenever somebody wants to bring that into existence, first they should file the run application. What is run application? Reserve unique name, because you can't start a company with the name which is already there in existence. Existing company name, existing LLP name, existing trademark, you can't start. That is why initially you should first file the reserve unique name application. If the name is available, then ROC, whatever application you make, you have to make it for ROC. ROC will reserve the name for 20 days. So 20 days time you have to file the remaining applications, remaining procedures, then finish the incorporation procedure. If you don't come within 20 days, they will cancel the thing. Again, you should make one more run application for reserving the name. Again, continue the following procedure. Then following procedure goes like, once the run application is happened, you should file spice plus form. It has to be in the INC 32 form. Incorporation 32. Form number INC 32. That is spice plus. Or what is spice plus? Simplified pro forma for incorporating company electronically. Simplified pro forma, not pro forma. Pro forma is like one format. For incorporation of company electronically. So when you file this spice, along with this spice, you should attach MOA and AOA, Memorandum of Association and Articles of Association, which is signed by subscribers. Plus, you should give declarations. So what declarations? 3 declarations you have to give. The first declaration is by CA or CS or CMA or advocate. What declaration they have to do? Because businessmen, they don't know how to do it. They will take the help of the professional people. Those professional people has to tell that whatever the compliance as per Companies Act is there, that is entirely compliant. That declaration should be given by these people. The second declaration is by the first directors or promoter, stating that whatever the information document given to CA CMA advocate for incorporation is correct. To the best of our knowledge, everything is correct only, nothing has been mistaken. And the third declaration that they have to give is by the same people, stating they are not convicted. What is convicted? They are not punished with imprisonment. For formation, promotion, management of any other company. ಬೇರೆ ಯಾವುದೇ ಕಂಪನಿ ಏನು ತಪ್ಪು ಮಾಡಿ ಶಿಕ್ಷೆ ಅನುಭವಿಸಿಲ್ಲ. That's what they have to give. I am not guilty of any of these things. These 3 declarations have to be given. Along with these 3 declarations, the promoters also have to give registered office address at the time of incorporation. If the registered office address is not there at the time of incorporation, then you should file within 30 days of incorporation. If not there at incorporation, then you should file within 30 days of incorporation to the ROC, the registered office address. Along with that, you should give some details. So what details? Whoever is becoming a member of a company, you should give the name, the director, everybody, surname, PAN number, mobile number, email ID, then PIN number, director identification number, then their address, If they are already directors are in other company, interest in other company, every details has to be given. If the company does not have any registered office address, then they should give some address for correspondence. Correspondence means communication. Some communication. Once ROC is satisfied with all the details, satisfied with all the details, then it will grant something called as certificate of incorporation along with SIN number, corporate identity number, corporate identification number, and this SIN number should be quoted in every communication. Made at any time. That means if you are giving any advertisement, if you are giving any notice, circular, definitely we should quote this SIN number along with the name of the company, registered office of the company. If the company registered by furnishing false information, that means they told I am not convicted, but actually they are convicted. They told whatever the complaints is to be complained, they are not complained actually. They told my mobile number, PAN number, that is wrong. Something is wrong. Something is not compliant. Then tribunal can declare, tribunal can order wind up the company, or wind up the company, or declare members liability as unlimited, or what is what is the next punishment? Wind up, order ROC to strike up the name, etc. They can order anything. This is the incorporation of a company procedure. Whenever they want to incorporate, INC, run application, declarations, MOA, AOA, all those things have to be given. Some registered office address, other things. Details of first director or promoter. Details of first director or promoters has to be given. If not there at the time of incorporation, file within 30 days of incorporation. Register office address. That is not mandatory at the time of incorporation. You can do it after 30 days also. Now the last concept which is there is doctrines. So how many doctrines are there? There are 3 doctrines. 3 doctrines. One is doctrine of ultra-vires, Then doctrine of constructive notice. Then doctrine of indoor management. Doctrine of ultra virus, doctrine of constructive notice, doctrine of indoor management. So what is doctrine of ultra virus? Doctrine of ultra virus means whenever you are acting as an agent of a company, you should always act within the powers given to you by the company. If the company says you can do only one activity, you can do only that activity. If the company says you can do two activities, you can do only within two activities. But if somebody acts beyond the authority given, ultra virus means beyond, ultra means beyond, virus means power. When somebody acts beyond the power given to him, then for the excess act, the members are personally liable unless company does the ratification. Ratification means approval, later approval. So for all the acts which is done in excess, any act in excess of power, powers given, members or directors are personally liable. Members and directors are personally liable. Then when it comes to doctrine of constructive notice, this doctrine of constructive notice says doctrine of constructive notice says whenever there is a dispute between company and outsiders, then law will protect the company. So why? Because section 399 says MOA and AOA are public documents. MOA and AOA are public documents. Those who are entering into the contract with company, those who are entering into contract with company, should have the knowledge of MOA and AOA. Even if they don't have the knowledge of MOA and AOA, we assume that they have the knowledge of MOA and AOA, because of which we protect the company against the outsiders. It is a duty of the outsiders to know whatever the contract they are entering, is it as per the object clause of MOA or not? Because a company can always do something which is given under memorandum of association of a company, object clause. They can't do something which is in excess of the MOA of a object clause of a company. That is why if you tell, sir, I did not know, all those things I don't know, I don't care, you will still protect the company, MOA and AOA. But when this happens, company might also misuse this provision by changing the internal rules and regulations. Then again, law came and told as an exception to doctrine of constructive notice. Did make an exception of doctrine of constructive notice, which says Law will protect outsiders against company. Law will protect outsiders against a company. See, I know it is a duty of the outsiders to read or know the MOA and AOA. But however, it is not the duty of outsider to know internal rules and regulation. Internal rules and regulation. If anything happens with respect to internal rules and regulations, then law will protect the outsiders against the company. For example, some cashier is there, if you remember the example in class we gave, some 10 people have come to take admission, chicken was doing the same thing. However, there are some exceptions of doctrine of indoor management. Exceptions of doctrine of indoor management. What do you mean by doctrine of indoor management? Who will be protected here? Outsiders are protected. When I say exception to DIM, who will protect now? Who will be protected? Company will be protected. DCN is also company is protected. Doctrine of construction is also company protected. That means exceptions of DIM are also called as DCN. Generally, we don't use the word DCN, but it is similar to DCN. Doctrine of constructive notice. So under this, there are 3 exceptions. 1, 2, and 3. So what are those 3 exceptions? First one is suspicion of irregularity. Suspicion of irregularity. You don't know, but you have some doubt. You feel like it is not good. Then law will protect company against outsiders. Actual knowledge of irregularity. You know something is wrong, still you enter the company. Then also outsiders are not protected. Then third one is forgery. Forgery of company. These are the 3 exceptions of doctrine of indoor management. Doctrine of ultra-virus, constructive notice, indoor management.
Forgery, the law should protect us.
Hmm?
In a forgery, the law should protect us.
No, how the companies even know that they have issued something? That is why law will protect the company. Because companies are innocent here. You are trying to make somebody guilty who does not know that they did something. Some third party did something without the knowledge of company. That's why company is being protected here. It was a duty of the outsider to verify whether it is coming from the company or not. For example, whenever you are doing some transaction and some shopkeeper gives one quota note, fake note, currency note, then will you blame RBI or that person? How does RBI get to know that there is some fake notes here with him? That's why RBI is being protected compared to the outsiders. So this is the entire Companies Act 2013. 21 marks will definitely come from whatever we discussed now. Entirely descriptive part, 21 marks in less than 4 hours. Not 4 hours. I think we took half an hour break, some 10 minutes. 3 hours only. 3 hours, 20 minutes we completed this Companies Act. I'll give 10 more minutes, go through entire Companies Act, then we'll get into the, once you revise it, then we'll get into the questions. Question and answer. We'll go into the questions part. 10 minutes. And then you also go through it. Again, understood? Don't waste the time here, it is important. Go through it, don't waste the time. In class also you wasted the time, at least now you read.
Sir, can you scroll down?
So in PF5, more than 51% of the share capital should be held by government, central, state, etc. And it should be either LIC or UTI or IDFC, Infrastructure Development Corporation of India. Only these things are known as PF5. This is very important. And as I told, in case of Section 8 company cannot declare the dividend irrespective of whatever it happens.
And that was getting 14 days. Instead of 21, 14 days.
That notice part. the general company, normal company has to send the notice with 21 days clear gap. Here the section 8 company can use 14 days sufficient. That is only for section 8 company.
So, there's the condition for an institution implies the right. The first condition has to be established or constituted.
Some special act.
Senator stated.
It is like, see, IDFC is there, that is under some other act. This UK, that is under some other act. They are companies. One more is LIC, life insurance. That is also under some other act. For example, IRD Act, Insurance Regulatory Development Authority. You should be definitely under any of the act. Not only in Companies Act, you should register in some other act. Plus more than equal to 51%. Plus everything has to be there. No. Exactly. Okay, in case of equity shares, check ICAI material loans or maybe R class material. Do we have anything called as differential rights shares, uniform rights shares? Differential voting power. You know what is differential voting power? Didn't we discuss that? Okay, we'll come back. Okay. See, when these equity shares are there, equity shares can be of two types. Equity shares can be of two types. One is normal equity shares, but I call it as UVR. Second one is DVR shares. So what is UVR? What is DVR? UVR means uniform voting rights. DVR means differential voting rights. Uniform voting rights means if your share, one share has one vote, my share also has only one vote. If your share has 10 votes, my share also has 10 votes. Uniform. Whatever the color of dress you wear for the school, my dress color is the same. That way called as uniform. School uniform, college uniform. What is uniform? Same, consistent. So if every share has same rights, then we call it as uniform voting rights. What is DVR shares? DVR shares are like those shares which has differential rights. See, again, I don't want to discuss that, but anyway, it is given. We'll discuss. Why do we invest in the company? Tell me. What is the purpose? Equity share capital. Why do equity shares? Companies access mainly two express purpose. One is getting the dividend whenever the dividend is declared. Second one is getting the voting power. But there is one more implied thing also, which we never address it. That is capital appreciation. So what is capital appreciation? I bought one share at 1,000. Company gave me dividend. I am experiencing that voting rights. But 1,000 rupee share has become 1,200 now. There is a 200 rupees capital appreciation. That is inbuilt will happen. I am not addressing that here. What is this dividend and what is this voting power? Whenever the company declares dividend, you will get the same dividend as other people are also getting. That is what we call as uniform voting rights. You will have a same voting rights as other shareholders also have. That is also called as uniform voting rights share, equity shares. What is DVR shares? DVR shares are like if the company issues the DVR shares, they'll ask, you want more dividend or you want more voting power? If you have decided, that you means company only will decide. These shares will have different votes. What is different votes? If they have one vote, you will have two votes. But to get extra votes, you should sacrifice the dividend. If they get 10% dividend, they will get only 5% dividend. Because you are getting voting rights extra. It is different. Either your voting rights and my voting rights are different, or your dividend and my dividend is different. Right? Either it is different in terms of voting rights or dividend. That is called as differential voting rights shares. This is one extra point in which is left. That's why I asked you to read the entire ICAI material. If you go through it, then you will understand. If there is anything left, we can complete and proceed ahead. If not, shall we look into the questions? First, we look into May 26 paper, specifically May 26 paper, then we'll go into our question bank. See, as we know, question number 1B is Companies Act. In the beginning of the middle, we have written 1B, 2B, 3B. I think all the three questions. Check it once. Companies Act. 1B, 2B, 3B. Then one more question is there somewhere. No, 1B, no. I think only three questions. 7 into 3, 21 marks. That's over. 1B, 2B, 3B. Here it is 1B question. First see, question is too lengthy, but instead of directly reading the story, but I will first read the questions. Analyze the applicable provisions as per Companies Act 2013, advise the directors. This is 7 marks question. So we will try to see. Advise on the following matters. Before reading the story, we will read this. Whether Ram and Sons can invest 25% of the can Raman, who is that? Online, mute yourself. So whether Ram and Sons can invest 25% of equity in H Foundation, that is section 8 company question. Now, did we anywhere discuss that some people are prohibited from investing in section 8 company? Did anywhere we discuss that some people are prohibited from investing in a section 8 company? We told the prohibition is there to give the dividend. The dividend cannot be given. Can these people invest? Yes, they can invest. Provided that should be compliant. What should be compliant? Because here also minimum number of members is required. How much? 7 members. Because section 8 company can't be a private company. Section 8 company is similar to public objectives. Public objectives, public company characteristics are there. Out of 7 members, they can be anybody. Individual, firm, company, or anything can happen. So yes, here it is answer is yes. Definitely they can invest. How do we write it? Then we will see it later. Then second, Ram and Sons has withdrawn its share of dividend since it has 25% stake in H Foundation. That means they have taken a dividend. Can they take the dividend? No, that is not possible. That is not against the act. Whether H Foundation should have denied for declaration of dividend, yes, they should deny because they should not give the dividend. The third one. H Foundation contended that central government cannot give order for winding up of the company. Is it true? Yeah, because if they violate the objective, then they can immediately give order. That is, no central government can give. Maximum the central government can do is that it can revoke the license and thereafter H Foundation can run its business. Whether this contention was justified? No, not justified. Central government even has the option to winding up, strike off, all those things they can go. First, now we will read the story. What is the story? H Foundation was incorporated under Section 8 Companies Act 2013. Section 8 of Companies Act 2013. It is May 26 paper, question number 1B. In May 20, with the object to promote healthier lifestyle of the human beings while caring for planet. The two objectives are there. One is people's life, second one is planet life. H was one among the founder members of the company. Mission of the company is to inspire the healthier living by providing pure, organics, sustainably sourced products that nurture both people and planet. H Foundation was running successfully in terms of objectives. Being well aware of the success of H Foundation, Ram and Sons, a partnership firm in which H was also having 80% stake, doesn't matter, invested 25% in equity shares of H Foundation in 2024. And the investors, they can invest, there is no problem. A few days later, Mr. Ram started interfering into the business of H Foundation by supplying poor quality raw materials, which defeated the main purpose of H Foundation of providing pure and organic products to the nurturing the people and planet. That is wrong. That should not be happening. Besides that, but in law there is no specific provision for that. Poor quality. Besides that, Ram and Sons pressurized the directors of company and H Foundation, succumbed by pressure, was forced to declare the dividend of 10%. No, this can't be done. Declaration of dividend is not possible. Ram and Sons withdraw their shares of dividend, whereas other shareholders did not withdraw their share of dividend on the ground that H foundation was incorporated for other purposes. Yes, other members are right. These members are Raman sons are wrong. Some farmers who are earlier supplying organic vegetables to H foundation, organic vegetable to H foundation, and were denied to supply their products after the interference of Raman sons, filed a complaint before central government because objective was not being fulfilled to revoke the license of H foundation. The central government, after hearing all the stakeholders, gave a notice for revocation of license of H foundation after issuing a show cause notice of company to the company. After revocation of license, central government ordered the winding up of the H foundation in the public interest. Some directors of H foundation approached you for this advice. Can they invest? Yes, they can invest. Can they declare? No, not will declare, but H foundation should be denied that declaration of dividend. Central government can order it. Central government can order winding up of company everything. So we know the answer. Now, how do we present that answer? For the purpose of that, we have to again discuss the one more time the answer writing method. So if it is a case study type of question, we go by PFC format: provision, fact, and conclusion. So in the entire three questions which were there here, we told main part that is Section 8 company. You should tell objective of the Section 8 company, special license from central government. If there is any violation, central government can revoke the license. Section 8 company cannot do the dividend. These are the main questions that is being the earlier questions revolving. So in the provision part, whatever we have read in Companies Act 2013, you have to write entire provision here with highlighting of keywords, covering all the important keywords of the main provision. It can be written in the own language also, but without compromising on keywords. Keywords should be compulsory there. Once you write it, then you should try to write it in the facts. That means fact is second paragraph. H foundation is there, 25% invested by so and so person. They want to give the dividend tax. Some summarized format, some 4-5 lines you write it. Then you should give the conclusion. So what conclusion? By applying the provisions as per Companies Act 2013, explained in one above, write it in the own words. The company cannot give the dividend, they can't withdraw the dividend, they can invest the money. The three separate questions, three separate conclusions has to be written. If the question is for more than or equal to 5 marks, try to explain the entire provision related to question and elaborate the facts, and decent conclusion is also required. If the question is for less than 5 marks, try to shorten the fact and avoid any additional explanation of the provision. Don't explain any additional things in the provision part. And underline the keyword, this is must and should, you can't compromise on these things. If you get a direct question which is of more than or equal to 5 marks, instead of PFC, we go by IAC format. Try to write introduction. For example, if I tell direct question is like what is company, explain its characteristics. It is a direct question. So what comes in the introduction? As per section 2(20), company means a company which is incorporated under Companies Act 2013 or previous company. Some meaning you should write. Then main answer, that features or characteristics of the company. Write 6 points, explain 2 lines each. Once it is done, conclusion. So what conclusion is there? If nothing is there, the above are the characteristics of the company. Just write something. There should be something for conclusion. There should be 3 paragraph format for any answer. If it is for less than 5 marks, directly go for main answer and give the conclusion. No need to do the introduction. 2 marks, 3 marks, etc. No, not required. You don't need to write provision, underline, and write the answer. No, you directly give one line. Yeah, that is automatically understood as provision, fact, and conclusion. And ICAI tells don't write only. No, don't write that word provision, fact, and conclusion. Make sure that there is a gap between the first paragraph, second paragraph, third paragraph. And difference between questions. If it is more than 5 marks question, then minimum 5 points write on each side. For example, if there is difference between company and LLP, company and partnership, we will discuss later. Write 5 points on both sides. Explain it. Write and explain 5 points. And if you want to write like 7 marks question is there, write 7 points. 5 explain, 2 don't explain. Keep it the same. If you can explain 7, you can explain. If not, minimum 5 points has to be explained. If it is less than 5 marks question, 1 point on each side has to be written for every mark. 4 marks are there, 4 points. 3 marks are there, 3 points. 2 marks are there, 2 points. What is the difference between question? If it is a definition type of question, write the entire definition irrespective of the marks being asked. If they ask private company definition for 2 marks, write full. Restriction, prohibition, except OPC, 200 members, employee, ex-employee, everything has to be there. definition is no compromise on the marks. Sometimes they ask state type of question, explain type of question. State means just mention the points. For example, state the characteristics of the company. Write 6 points, no explanation. If they ask explain the characteristics of the company, write points and explain that part also. If you are not able to write for full page, see if it is more than 5 marks, 1.5 page answer you should write. Less than 5 marks, 1 page answer is okay. If you can't write those answers, try to explain with a few examples. That will increase the quantum of the marks, quantum of the answer. But don't put some nonsense there just because you want to explain. And this is drawing number is not required because you don't need to take the scale and write on this inside article. You can directly take. That's all. Or else you don't need to put the line also. Make sure that there is some gap here also, here also. First point you write, second point you write here, then it is possible. Only thing is you should highlight everything. Highlight means underline. And you should use only one color pen in the exam. For underlining also you can't use other pen. If you are writing a black pen, underline with the black pen. You can never use pencil, you cannot use blue pen. You can use only blue pen or only black pen. Blue with black, black with blue is not possible. And if it is MCQ related paper, they will give a OMR. You should fill entire your personal details in pen, and the answer marking is in pencil. Only answer marking. Remaining your roll number, everything is pen. Pencil. Filling is in the pencil part. Filling is not in. Huh? What happened? So here, if you see, all the things are in pen only. The final everything, but only this part is in pencil. That is mandatory. When you read the question paper, they will give HB pencil, some pencil they will tell. Huh? HB. Some dark, it should be dark.
Any pencil.
They will simply tell. So based on which we will check the answer once. Question number 2. Section 8 company can issue shares to persons or entities including partnership firms. Yes, here they can hold 25%, there is no problem. First question they answered it directly. Okay. As I told there also can change. Here they change it. There are 3 questions. First question, they wrote the provision, answer. Provision, answer. Provision, answer. Instead of that, you can write all the provisions at one part, all the conclusions at one part. That is what I suggest. Here again, second part. What is second company? I not read everything. Established formation for charitable objectives, social welfare, science, sports, education, etc. Such company intends to apply its profits in promotion of objectives and prohibiting to payment of dividend to its members. This has to be there. Declaration of dividend under pressure is a clear violation of conditions of license granted under Section 8. Even though they hold 25%, no member of Section 8 company has the right to receive the dividend from Section 8, because of which Ram and Sons withdraw the dividend is invalid. So it is H Foundation should deny the Ram and Sons for declaration of dividend at 10% and withdraw the same as it was prohibited under Section 8. That is, if those Ram and Sons has declared, the company should withdraw it. No dividend is given. Go back. So the second part. Third one is revocation of license. Yes, government can do it. It is like, I will read directly only one part. Upon revocation of license, central government may, by order, direct the company to convert its status, change its name, wind up, amalgamate with other Section 8 company having the similar objective. This is the main part. Because of which it is invalid. Company contending that you can't order for winding up. It can be order. But before you do anything, you give the opportunity of being heard. You ask the foundation why did they do it. That's why contention of H Foundation was not justified. Yes, central government can give order for winding up of Section 8 company in the public interest. See here they gave 2-page answer. You can't write, you should not write also. Because they just want to do the copy paste job. What is that? You should remember and write. That takes some so good amount of energy. So try to write only whatever I highlighted here. That is better. That is 1B, 7 marks question. When we come to 2B, differentiate between equity shares with differential rights and preference shares under Companies Act. That means equity shares with DVR and preference shares. So when they are asking for 3 marks, try to write only 3 points. 3 points, 3 points each. 3 points for DVR, 3 points for other way. So what is the 3 points on this DVR? First point is DVR shares having differential rights with respect to voting or dividend. Preference shares has no voting rights. Preference shares has fixed dividend. 2 points, voting rights and dividend part. Preference shares is not mandatory for a company. Equity shares are mandatory. Equity shares have to be there. DVR is also not mandatory, but DVR is compulsory. A company can have, company no need to have also. Preference shares compulsory redeemable. Redeemable means at the end of its maturity period, 20 years maximum, they have to give it back. But equity shares, no redemption period is there. They can go up to whatever the period of time they want to have. It is up to the thing. Discuss the doctrine of constructive notice. Just now we discussed. MOA, AOA, public documents as per section 399. Anybody telling me the company should have the knowledge, that nonsense you have to write. So here, differential dividend or voting. Here it is preferential dividend and preference over repayment of capital. Part of equity capital, separate category of share capital. This is no preference over equity shareholders. Here dividend is given as a preference to equity shareholders in preference share capital. No repayment of capital during the winding up. Here repayment of capital during the winding up. First preference, preferential repayment. Here no preferential repayment. Yeah, same normal equity shares only. Only the changes differential rights are dividend. Dividend is variable based on profit. Here it is fixed dividend. DVR differential voting rights. Here it is no voting rights only. Preference shares get preferential dividend and preferential repayment of capital, but no voting rights. Generally, 2 exceptions are there for voting rights. You don't need to remember that. Then constructive notice. You should explain. 399 is very important section there. You should take that into consideration also. That is question number 2B. Then question number 3B. This is also 7 marks question. Companies Act. State Power Financial Private Limited, SPC Private Limited, was incorporated into Companies Act 2013 with 51% of the shares held by central government to promote infrastructure for future formation. That means this is what company? Government company. More than or equal to 51 is government company only directly. The board of company had the appropriate representation of the nominees of the central government. Okay. The company performed extremely well in initial years after incorporation. However, use of AI in the field of information technology broke the backbone of company and its scale of performance nosedived during the last 3 years. State Power Corporation Private Limited has neither conducted any business nor filed the required returns with ROC. In the last 2 years, that means inactive company, it has to go there. The board now wishes to apply for dormant status. Okay. Some directors of the company opinion that having 51% stake of the central government, the company should be considered as public financial institutions in the terms of provisions of Companies Act. On the contrary, some other directors also opposed that being a private company, State Power Financial Corporation cannot be considered as a government company. It doesn't matter whether you are a government or public. More than or equal to 51, you are a government company. The directors decided to procure your advice regarding the following matters. First one is having 51% stake of the central government, whether it is a private or public, considered as government company since it was incorporation. Yes, it is considered. Whether state power corporation could be considered as a public financial institutions in terms of provision, we have to check. Whether the company is eligible to apply for availing the government status, yes, because more than 2 years not filed, those things happen. Directly I will tell, I'll read the answer. In the instance case, 51% of the CA is held by central government, therefore company shall be treated as a government company. You just explain the two particular provisions, write this. It doesn't matter whether you are a private public. The contention of directors that a private company cannot be government company is incorrect because more than 51% or equal to 51% that is government. PFI. PFI means only IDBI, LIC, UTI, IFCI, ICAI, etc. Here it includes any other institution notified by central government. A government company does not automatically become PFI merely because 51% of central government share capital. It was incorporated. Okay. There is no indication that State Power Corporation Private Limited has been specifically established as a PFI under the Act or notified by central government. They are into infrastructure company, that's okay. It cannot be regarded as a PFI. Only those things which are highlighted in PFI definition, that is important. You mark PFI as important. They only ask this 270. Dormant company formed for future project or holding asset IP with no significant accounting transaction, SAT. Such company or an inactive company may make an application for registration to obtain a dormant company. What is inactive company they have given? Here, last 2 financial years has not filed financial statements or annual returns during the last 2 financial years. Since SPC has neither conducted business nor filed anything in last 2 years, it is eligible to apply for status of dormant company. See, here the purpose is you should read and remember the full answer, but will you be able to attempt the question? That is what the purpose of this marathon. If you are getting the confidence, you should go home, do much extra work, try to do writing practice, all those things, then it will be better question. There is one more question which has come in RTP September 26. Your attempt RTP and the Jan 26 paper. You say Jan 26, not May, Jan 26. What is that question? What do you mean by common seal? Official signature of the company. Is it necessary for a company to have a common seal? No, from 1516 it is optional. Instead of that, 2 directors, 1 director, MD, 1 normal director, 1 company secretary can sign it. Discuss as per the provisions of Companies Act. That is first question. Second question actually should start from here. Actually, there's a printing mistake there. Whether the phrases company limited by shares, company limited by guarantee are same? No. Their shares are there, here shares are not there. If not, explain any 4 differences between these two according to the provisions of Companies Act. That means, I think maybe 3 marks question, maybe 4 marks question. Because they asked 4 differences. 1 mark, 1 difference. Here it is 4 marks question, here it is 3 marks question. So common seal is not mandatory. Read it once, we'll see. Same answer only, nothing changed. Yes. So actually, there should be a difference in this serial number, company limited by shares, company limited by guarantee. There should be like three separate sections. That is when lost there. The first point, the second point, third point, fourth, fifth. They have 4 points here. They have written 5 points. This question we can manage. I don't think there is nothing. So the next question is RTP May 26, previous year September 25 question. Do you agree that company is an artificial person? Yes. You should elucidate. That means explain. Also explain how the authorization of Mrs. Beta Limited, a company incorporated under the Companies Act 2013, can be made in case of does not have a common seat. 2 directors, one should be MD or one director and one company secretary. That is there. See, when they ask artificial person, don't just tell yes. Tell yes, it can have property, building, bank account, everything you have to explain. Because because it is asked in RTP, we don't have the number of marks. In previous year paper, maybe some 3-4 marks question might have been there. This one. No, not 3-4. 3-4 marks question only. Then again, next question is Jan 26 paper question. Prasad incorporated an OPC to run his new startup in May 2021. OPC borrowed 50 lakh to meet its long-term funds requirements and 25 lakh to meet its working capital. Okay, on the basis of his project from NBFC in 21 October. But due to some running hardships and new government policy, OPC failed to repay its debt to NBFC. Assets of the company were there is no special. It is what insufficient to pay the outstanding debts. According to the provisions of Companies Act 2013, decide whether Prasad would be liable to pay the outstanding debts of NBFC in the following circumstances. That means, is he personally liable for the debts or not? That's what they are asking. Here they are asking specifically, is Prasad? It is not OPC. First case is, if the NBFC proceeded against the personal assets of the Prasad only on the ground that he is the only shareholder and hence liable for debts. Is it valid? No, liability of the member is always limited. Whether it is OPC doesn't matter. Whether it is a single member, that also doesn't matter. It is a single shareholder, this is difference. Why? This will happen only in case of what? If it is fraud, kind of incorporate will kind of any situation comes, they lift it, then he will make it personally liable. If the NBFC proves that OPC was formed for fraud or cheating, then he is personally liable. If it is not for fraud or cheating, then he is not personally liable.
Sir, question number
What there is on OPC, the member is Prasad, and OPC borrowed 75 lakh rupees from one bank, NBFC. Now OPC could not do its operation, because of which NBFC thought I'll file a complaint against not OPC but the Prasad member to recover the money, because he is the only member. Is it valid? That's the first question. Because it is a company, separate legal entity, whether it is OPC, private, small, doesn't matter. Company is a company, member is a member. So member is not liable. That's the first question answer.
But there is corporate, we can lift the corporate.
Only in what cases? Few cases it is there, not every place. General business may incur loss also. That's a possibility. All the companies will not definitely make the profit. Some companies will incur the loss, some companies will again proceed ahead. But if he is formed the company for fraud, cheating, etc., then they will the corporate will Prasad is personal liable. That is the question here. 262. Okay, wherever mentioned, possible they mention the section, you also use that. First one is NBFC cannot proceed on the ground that he is the sole shareholder. First question not possible. Second one is Prasad would be liable to pay the outstanding debts of NBFC as it is for cheating or fraud by lifting the corporate rate.
Doctrine is theory.
That one is a theory. Well established theory. That is Jan 26 paper, 7 marks paper, I think. 7 marks question. Then I think question number 64 is missing here. But here is just okay. I think 285 they have. The agreement was to share profits and business. Okay. Shruti Textiles will read the question. Even if there is no answer, that's okay. It is also Jan 26 paper. Shruti Private Limited is a wholly owned subsidiary of SS Textiles Limited. It has only 5 members and restrict the right to transfer their shares to any person other than the person who is in employment of the company. That means private company can put the restriction. Some members oppose the decision of the company as they want to invite group of people to subscribe shares in Shruti Textiles Private Limited. Decide with reference to the provisions of Companies Act 2013 whether restrictions of the company transfer the shares are correct. Yes, it is correct. That can be restricted, private company. Write the definition, explain this. Second one, second part, this is second question only. Paid up capital and turnover of Aradhya Cosmetics Private Limited. Okay. 24-25 is 4 CR and what is this? Capital and turnover is also there. So turnover is 45 CR respectively. 24-25. That means in that year it was 440 only turnover limit. Directors of ACPL denied not to follow some provisions as it is a small company according to 85. Is it correct? No. See, this is a Jan 26 paper. That means 1 year back paper. At that time it was no. Today it is correct. If this question comes today, they will make it as instead of 4 crore turnover, they will make it as 12 crore turnover paid up capital. Instead of 45, they will make it as 120 turnover. That is how it is happening. We have to read it from 4 and 40 angle only now. I will change it. Wait. It is 12 crores and 120 crores. Company Secretary Pooja Fashions Limited. I think this is the third question. I think. So second one is also not possible. Third one is Pooja Fashions Private Limited. Contended that ACPL is a continuing part only. ACPL is not a small company as ACPL is a holding company of PFPL. ACPL is having PFPL. What is PFPL? Okay. Decide whether the ACPL Cosmetics can avail the status of small company according to the provisions of Companies Act. 2 restrictions are there. If you are a small company, there are 2 other conditions. You can't be a holding company also, you can't be a subsidiary company also. If you are already a holding or you are already a subsidiary company, then you can't be a small company. Small company status will never get. The third condition is that 10 and 100 crores criteria you have to do. Here, because it is a subsidiary company, it can't be a small company. Because the turnover and paid up capital is also more, it can't be a small company. Both violations are there here. Then PUC of Abhinav Natural Gas Limited. When I say limited, public company, is 140 CR. Holding of central government and Maharashtra government are 40 crores and 30 crores. How much it is? 70.30 divided by 140. Do it. 70.3 by 140. 70.3 by 140 percentage. 50.21. 21. Okay. In one tender relating to natural gas directors of ANGL quoted it as government company. It is totally wrong because at least 51% is required. Write the definition, explain the case, then conclusion. Decide according to the provisions of Companies Act 2013 whether ANGL is tagged as government company. No. It is other than government company. Easy only, you can definitely manage. Explain MOA, AOA, write the difference. When is it being asked? September 25 paper. May 25 paper, I don't want to again read everything. This last question we'll discuss. State with reasons whether the following companies can be treated as small companies with reference to the provisions of Companies Act. See, because it was at that time, you should think from 4 and 40 under. That is what it is there. STS Private Limited having turnover of 10 CR, paid up capital of 1 CR. Okay, turnover 10, paid up capital 1. Both are less than that. Yes, it is a small company. Out of that, 60,000 equity shares are held by UV Infrastructure Private Limited. No, it can't be a small company because out of 1 lakh shares, 60,000 shares are held by somebody. That means 60%. That means somebody is a holding company or a subsidiary company. Yeah, you just can't go by turnover and paid up capital. Agreed. But we know a small company cannot be a subsidiary and holding company also. If you see here, they have 1 crore rupees of capital, 1 lakh shares of 100 each. Okay. Out of 1 lakh shares, 60,000 shares are held by UV Infrastructure Private Limited. That means 60 by 100 is equal to 60%. Not possible to small company. Second question is ZX Limited having a paid up capital of 3 CR. Okay. Turnover of 35 CR. Yes, it can be possible. Nothing given anything. You will consider it as less than 4 and less than 40 over there. The PUC of ACD Limited is 80 CR and preference shares is 20 CR. B Limited holds equity shares of ACD worth 15 CR. What is the equity now? 80, out of which 15 is held by somebody. 15 or 20 is equal to 25%. And preference shares we never take into account for consideration. Can B Limited be considered as an associate company of A Limited? Yes, because more than 20% is there, yes, it is there. Can it be called a small company? Not possible. Why not possible? Yes, turnover is more than that. But only primary thing you should understand is B Limited. The moment it is a limited, it is a public company. Public company can't be a small company. You should read from that perspective also. You just don't just fall for the turnover and the paid up capital part. Is it associate? Yes, significant influence is there, more than 20%, equal to 20%, this can be there. Doctrine of Indoor Management, okay, we can. That is May 25 paper. I think this is Section 8 company. So, Section 8 it is MOA related part. May 25. Jan 24. There are so many questions, similar questions only, nothing changed. We'll take some random questions, we will see. This is which question? RTP September 26 MTP. RTP September 26 as well as it is there in MTP also. Okay, we'll read this question. 18th question. Mr. R, a manufacturer of toys, approached MNO Private Limited for supply of raw materials worth 1.5 lakh. R was offered a credit period of 1 month. Okay. R went to the company prior to the due date and met Mr. C, an employee at the billing counter. Okay. Who convinced the farmer? Farmer means earlier, this R, that the payment can be made to him as billing cashier is on leave. By reading this, some Chikana's case will come to you. Internal may be there. Mr. R paid the money and was issued a signed and sealed receipt by Mr. C. After the lapse of due date, R received a recovery notice from the company for payment of 1.5 lakh rupees because company don't know this. R informed the company that he had already paid the above amount and being an outsider had a genuine reason to trust Mr. C, who claimed to be an employee and had issued a receipt. Okay. The company filed a suit against R for non-payment of dues, discussed the fate of the suit and the liability of R towards company on the current date. Yes, consonance with the provisions of the Companies Act 2013. Would your answer be different? If the receipt under company seal was not issued by C after recovery of payment, doesn't matter because inside the thing. But only one thing we have to check is it should not fall under exceptions. DIN has 3 exceptions. Is it falling under exceptions or not? That has to be carefully verified by you people. You can print the answer. Online, are you understanding? Comfortable now? Here they mention so many cases, Royal British Bank versus Turk Bank. Never bother about those things, just ignore it. Malleshwaram guys. Everybody Malleshwaram there here? Pampapati, Kaushik. First one is R is not liable to pay the amount of 1.5 lakh as he had a genuine reason to trust Mr. C is an employee of the company who had issued him signed and sealed receipt. This is the first one. Yes, it is companies law will protect outsiders. Liability of Mr. R. In case of no receipt is issued by Mr. C, you should check as an exception to Doctrine of Indoor Management, suspicion of irregularity, etc. Whenever somebody does not give the notice, something wrong there. That's a suspicion. You have to be careful there. If the transaction was not in ordinary course of business, if the receipt under the common seal was not issued to Mr. C, after receiving the payment, Mr. C is liable for the paid amount will be deemed to be negligence on the part of Mr. R because he should have taken the receipt, not taken this actual irregularity, suspicion of irregularity. So you did not take, you should be liable. It is his duty to make the necessary inquiry to check that whether C is eligible to take the payment or not. Suspicion of irregularity. Whenever you don't get a notice, you should understand, oh, something may be there. It falling under exception. See, that's why one more session I will give you people is stop reading content part. Like today you read it, from next time whenever you read, try to go by question and answer format so that you will be better with respect to content. Also, question and answer extra small points are there that can also be covered there. Never go by content again. Some points are also there after September. And one you can keep it in mind is you can take 2026 September, May and Jan RTP and same 2025 same RTPs. These RTPs are sufficient. Go for only 2 years back. Then previous year paper only again 2 years. Then again mock test paper again 2 years. You do these questions, definitely you will get more than 60-70 in the law. You should be perfect in whatever you do because it covers almost every concern. If it happens, see here 1, 2, 3, 6, 4, 5, 6. 6 papers are there. 6 papers means every paper has 3 Companies Act questions. 6 into 3, 18. We don't have 18 concepts only in Companies Act. So definitely it has to be repeated. Try to do that. This is where we end the Companies Act 2013. Are you comfortable in Companies Act? Please. Tell me what do we do? We'll start partnership or LLP? LLP. Okay. Limited Liability Partnership Act 2008. So this act has come before 2013 Companies Act because as the name itself says LLP Act 2008. So what is this LLP? Why the concept of LLP has come? See, when before LLP, you don't talk about don't think about Companies Act 2013. 1956 was also there, in which what was happening is, as per if you try to go for a company form of organization, it is to take so much of compliance cost, incorporation procedure, so much of cost to pay to auditor, incorporator, CAC, so much of compliance part, where the company is supposed to have one separate person for the law itself. But if you go for partnership kind of entity, what was happening? The biggest problem for there is unlimited liability, where your personal assets and also liable for the entire activity of the activities of the partnership. So because of which people are demotivated, they want to go partnership. Yes, they are having a fear that what about my wife and children tomorrow if something goes wrong. They want to go to Companies Act, extra cost I have to incur on those things. That is both the fear. So then Government of India, Ministry of Corporate Affairs, came up with a brilliant idea in 2008, stating that we will give the benefits of company as well as partnership in other type of entity, different type of entities. That is why the concept of limited liability partnership has come into existence. What is limited liability? Limited liability is a feature of company. Partnership means internal things can be arranged internally without trying to call for the meeting, shareholders meeting, all those things are not required. In case of partnership, how do we do it? Appointment happens. Okay, existing partners add in the partnership deed, admission, gate ratio, sacrifice ratio, everything will happen. Then get them into the form. If somebody does not want, if they don't want to continue, they can leave. Okay, take your share, everything, get out of the partnership. You don't need to take the permission of central government and all those things. So it is having the benefits of partnership as well as limited liability partnership. Both the things are there here. So Limited Liability Partnership Act 2008 LLP says it is a hybrid kind of organization. What is hybrid kind? It is not the company. It is not even the partnership also. It is in between. ಇದು ಜವಾರಿನೂ ಅಲ್ಲ ಇದು ಅಲ್ಲ ಇದು ಹೈಬ್ರಿಡ್ ಮಧ್ಯದಲ್ಲಿರೋದು ಲೈಕ್ ಕ್ರಾಸ್ ಬ್ರೀಡ್ ಕೈಂಡ್ ಆಫ್ ಥಿಂಗ್ So where LLP Act or LLP Act, it is governed entirely by LLP Act 2008. Partnership Act 1932 is not applicable, as well as Companies Act 2013 is also not applicable, because when you have your own parents, why do you want to call somebody as parents? No, not required. LLP Act 2008 is there for you. You can call it as your governing act. Some days are there here, days are not important. Directly I'll jump into the content. This LLP Act has totally 81 sections and 4 schedules. As Companies Act had 470 sections and 7 schedules. For foundation it is not applicable. The LLP Act also has 81 sections and 4 schedules. So what are those 4 schedules? Schedule 1 is talking about mutual rights and liabilities of the partner to the firm LLP and LLP to the partner. That is Schedule 1, mutual rights and liabilities. Schedule 2 is you are already doing business in some other entity form. For example, you are already a partnership. You don't want unlimited liability, so you want to convert into LLP. Can you convert? Yes. Follow Schedule 2, you can convert. No sir, I am not a partnership firm, I am a private limited company. Yes. Follow Schedule 3, you convert into LLP. No sir, I am not private, I am unlisted public company. Schedule 4 is yours. So for private company, unlisted public company. Schedule 2, Schedule 3, Schedule 4 is the procedure to convert into those kind of entity into LLP. 2, 3, 4. For private and public, unlisted. Can a listed public company convert into LLP? First, delist your shares, make yourself as unlisted, then follow Schedule 4. It is available there. So, what is limited liability? Meaning and concept. Limited liability is a new form of organization which is hybrid, in which alternate corporate business vehicle we call it as, that will give benefits of both company, that is limited liability, and at a low compliance, as well as it will allow the partners the flexibility of organizing their internal structure, appointment, removal, change of partnership sharing ratio, everything is possible here. Because LLP also has to come into existence only by way of incorporation. This LLP is also called as an separate legal entity, artificial person. Whatever the features of that is there, here also there. You tell me, is it mandatory to register the partnership form?
Yes.
Partnership form. Good morning.
Oral or
Huh?
oral or
Registration. I am not talking about partnership deal. It is not mandatory. You can start your business with your husband and wife, brother and sister, brother and brother. Everything can happen. You can start. If you don't like, you can close it. No registration also. And there is no punishment for non-registration also. No penalty for non-registration. However, LLP, if you want to bring it into existence, you have to compulsorily register under Companies Act 2013, not Companies Act, LLP Act 2008, under MCA website, Ministry of Corporate Affairs. Who is the regulatory authority for LLP? Same, ROC. Register of companies only will govern companies also as well as LLPs also. So LLP contains elements of both corporate structure as well as partnership firm structure. LLP is called as hybrid between the company and partnership firm. Hybrid between company and partnership firm. LLP as a separate legal entity and business organization is an alternate corporate business form. See, what is alternative corporate form? Corporate form is company. Other than company, this is also corporate entity. Gives the benefits of limited liability company and flexibility of partnership. So this is important. Maybe they can ask 3 marks question. Body corporate. What is body corporate? Body corporate simply means four things are 4 types of entity put together we call it as body corporate. So what are the body corporate? It means a company, that means 2-20 is also body corporate. I'm not talking what is company. Company means a company Allah. Body corporate means a company, and it also includes. I'll directly read. Company incorporated outside India, that is foreign company. LLP registered under this act, that is 2000 Act, that is called as Indian LLP incorporated outside India, that is foreign LLP. These four things put together we call it as body corporate. Whether it is an Indian company, whether it is a foreign company, whether it is an Indian LLP, whether it is a foreign LLP, they are called as body corporate. But body corporate does not include two things. One is corporation sole, does not include corporation sole and a cooperative society. Corporation sole and a cooperative society. And again, they also told any other body corporate where central government has specified by notification, but nothing has been specified as of today. So only two things: corporation sole and cooperative society are not body corporate. These definitions I will not read. Whatever it is important, directly I will come there. What is financial year? Any year which is starting on the 1st of the April is called as financial year. But ending on what? They never told it. But think common sensely, if you want to begin the next year, you should end the current year. When you are going to begin the next year? Again 1st April only. That means you should end on 31st March. Because of which it is called as one financial year between April to March. This is the LLP definition. This is an important, they can test this part also. See, financial year as we know it is 12 months. But if you are an LLP which is incorporated after 30th September, that means on or after 1/10, 1st October and later, then your financial year may end on 31st of March of the year next following that year. For example, if I start on 5/10/2025 year, that is after 30th September. Now, generally year should end on what? 31st March 26. But you may end it on 31st March 27. May, if required, you may. Because the word is may. You may end on the 31st day of the March of the year, of that year, next to following that year. Following year is this, next to following that year is this 27. Simply they are trying to tell a financial year in LLP can be maximum of 18 months. Because September, October, November, December, Jan, Feb, March, 6 months are in the current year, again 12 months in the next year, 6 plus 12 is 18 months. What should be the minimum financial number of months per financial year? Minimum how much should be there for a financial year?
18 months.
6 months. Because if you start on 30th September also, you have to end your financial year on 31st March of next year itself. Means October, November, December, Jan, Feb, March. 6 months. Minimum 6 months, maximum 18 months. In company, I forgot to tell, in company also, one financial year can be maximum 15 months, not 18. That means same definition, but they told not 30th September, they told after 31st December. If you start any company on Jan, Feb, March, instead of ending on March, you can go to the next March also. A company maximum period is 15 months, minimum is 3 months. If you start on 31st of December also, you can continue in the current year. Jan, Feb, March, 3 months. For company 3 and 15. 3 and 15, minimum and maximum. So whenever you want to bring any LLP into existence, there should be, as I told, Schedule 1 talks about rights and liability, mutual rights and liability. What are the mutual rights and liability? All those things are to be given under a document called as LLP agreement. What is LLP agreement? It is a written agreement between the partners of the LLP, between the LLP and its partners, which determines the mutual rights and duties of partners, their rights and duties in relation to that LLP. LLP agreement is a written document which will decide what are the rights and liabilities of the partners and LLP with respect to each other. Who is a partner? I don't want to read. Partner is a partner who is called as partner as per LLP agreement. Yeah, I'm not joking. You can read the definition. Means any person who becomes a partner in LLP in as per LLP agreement is called a partner. This is important. 3 months they can test. Small company as we had 285. Here also small LLP it is there. You can don't remember the section also. I don't suggest you to remember. Because company is a bigger organization, we have everything in crores. Now LLP is a small kind of organization, everything is in lakhs. So instead of 10 CR and 100 CR, it is 25 lakh and 40 lakh. Do we have capital, paid up share capital in LLP? No, because it is a kind of partnership. Part of partnership, there will only capital contribution by the partners. So contribution does not exceed 25 lakh. capital does not exceed 25 lakh, and turnover as per the latest P&L and solvency statement does not exceed 40 lakhs. You should read it clearly. Contribution does not exceed 25 lakh rupees or such higher amount not exceeding 5 crores as we prescribed. As of today, they prescribe 25 lakhs. If they want, they can make that 25 lakh rupees as 50 lakh also, 1 crore also, 2 crore also, up to 5 crore they can increase that. That's what that means. So this part is not applicable. Don't write also in examination. If you want, you can write, but you can ignore also. But don't mention the wrong number. So whose contribution does not exceed 25 lakh, that means less than or equal to 25 lakh. And turnover, as per statement of account and solvency. What is solvency?
Right.
That means I am capable of taking care of myself for next one financial year. You have to give that statement in LLP. Immediately preceding financial year does not exceed 40 lakh rupees. Less than or equal to 40 lakh. If you are falling under, see, it is and condition, not all condition. Capital also should be less than 25. Turnover also should be less than 40. Then only this is possible. So capital contribution is 20 lakhs, but turnover is 50 lakhs. Then I am not small LLP. Capital is 30, turnover is 20. No small LLP. Capital should be less than 25, turnover should be less than 40. Then only this is possible. Partnership act is not applicable. This is again a 3 marks question, or they may ask 4 marks question. Partners. As per section 5, who can be a partner in LLP? Any person can be a partner in LLP. There is no restrictions with respect to being a partner in LLP. So, any individual or body corporate, that means individual can also become, body corporate also become, may be partners in LLP. However, this is important and this will ask, what is the disqualification of becoming a partner in LLP? If you are an, like you, found to be unsound mind by a court of competent jurisdiction and the findings is still in force. That means court ordered you as mental and they did not take it back. That is what you are ineligible. But don't use the word mental, it is unsound mind, technically. Or if you are an undischarged insolvent, what do you mean by undischarged insolvent? Your discharge procedure is not completed. The order, asset selling is still in process, liability settlement is still in process, then also you can't become a partner in any LLP. He has applied to be adjudicated as an insolvent and his application is pending. Now if you remember, I specifically highlighted one point there. What is that one point? Consider I have given 1000 rupees to Hamad did not pay it back. Then I went to the court. Your Honor, I am asking 1000 back, but he is not giving. Make him as insolvent. Declare him as insolvent. You don't have even 1000 rupees at all. Because there is. Declare him as insolvent. And the judge is listening to my words and took the application into that. Will you be disqualified person to become a partner? Huh? Will Hamad be a disqualified person to become a partner in LLP? Huh? How many of you tell yes? Yes. Yes or no? No.
Yes.
Yes. Hamad? No. I don't know, sir. Reels here is not insolvent. He is eligible to become partner because the word here is he has applied. If other person applies on behalf of him, that is not taken. If Hamad applies to the court, I can't make me as insolvent, then that application is still pending in the court, then he is ineligible. If some third party applies, then he is still eligible. Doesn't matter whether the case is taken, case is not taken, doesn't matter. He has to be applied. The word he is very important. Something, what about she? She is also included. He includes she always. Don't tell. Then this is also important.
So adjudicated.
Adjudicated means ordered by the court. What is the minimum number of partners required for a partnership firm? Partnership firm. What is the minimum and maximum partners of partnership firm? 2 and 20. What nonsense. Partnership. 20 only. Where did you study? Tell me. 2 and 200. Absolutely wrong answers. 2 and 50 is the right answer. Private company members are 200. Partnership firm is 50 only. No, but partnership is we are not discussing. We are discussing LLP now. In case of LLP, what is the minimum and maximum partners? 2 and unlimited. Yeah. One thing is taken from partnership, one thing is taken from public. Minimum is 2 partners and maximum is unlimited. LLP can have as many number of partners as they want. It is up to them. So every LLP shall have at least 2 partners. See, shall have at least 2 partners compulsorily. So this is important, and this only they tested one question. Consider me, Hamad, are 2 partners. We joined. Hamad, because he fell in love, he left the LLP. Then he went because something happened in their relationship. So now he resigned. Okay, I don't want to be a partner. He wrote everything gone. Now what happened? I am the only partner in the firm, because of which LLP agreement is only one partner. I am running my business. If I don't appoint somebody as a partner within 6 months of his resignation or his removal, and I continue after 6 months also, any activity conducted after 6 months, I will be personally liable. Limited liability concept will come to an end after 6 months. Up to 6 months is a buffering time. There I will not be liable for any act, but after 6 months I am personally liable. In company also it is there, but you have to check. If I have a private company, minimum is 2 members. So if less than 2 in private company applicable, less than 7 in public company that is applicable. Minimum number of statutory limit. If at any time the number of partners of LLP is reduced below 2 and LLP carries on the business for more than 6 months, while the number of so reduced, the person who is the only partner of the LLP during the time that it so carries on the business after those 6 months and has the knowledge of the fact that it is carrying on the business with him alone, without 2 partners, then he shall be liable personally for all the applications of LLP incurred during that period. What is that period? After 6 months. After 6 months. Minimum is 2 partners and then comes a designated partner. Who is designated partner? A partner who is designated as a designated partner is a designated partner. A legal definition. See that. Now that is already over. Definition is there. How many designated partners are required for any LLP? 2 designated partners. So you only told 2 partners are required. You are telling 2 designated partners are required again now. Is it 2 plus 2? No, because the moment you call designated partner, they are already partners. You don't need to appoint other 2 partners to comply with that. The moment 2 designated partners are there, that is like 2 partners are also there, 2 DPs are also there. What happened? Every LLP shall have at least 2 DPs who are individual. This is also important. The 4 marks question they test. See, DP should be individuals and at least one of them should be resident in India. Should remember. What do you mean by resident in India?
They should be resident in India.
At least 120 days in India in previous year. Out of 2 DPs, one should be resident in India. 2 DPs has to be individual.
They are even during the financial year.
Financial year is during the financial year means It is previous year only. In income tax, that is how it is written. There are two words: financial year and assessment year. Financial year is previous year. For example, we are in what date today? 5/8/26. That means 26 and 27 we are in. This year called as assessment year. Okay, you tell me common sense also. As common sense.
Sir, in company fact, they are given that during the preceding financial
Yeah,
year.
that's okay. That's okay. You tell me. I am starting on LLP. On what date today? Today is not August. April, May. May 1st I am starting an LLP. Now I want to be a DP. Out of two persons, one should be a resident in India. That means 120 days in financial year. Financial year starts when? April 1. April 30 days over. May 1 I am starting. Where did I complete 120 days to be in India? No, I'm asking this question. Understood the difference why that is previous year. When the LLP is getting started in the beginning of the year, how can you count 120 days? That is not possible. You can have 120 days in the completed year, not in the continuing year. Understood the classification? Who is right, who is wrong? That is not the question here. You are trying to understand what I am trying to tell. Okay, you are telling us financial year. It is not current year. Financial year is always previous year only. Assessment year is current year.
So LLP started at May 1st.
The moment LLP starts, 2 DPs are compulsory.
So instead of 26, 27, 25, 26.
Not instead. Always 25, 26. Always. If you are in 25, 26, then 23, 24. Sorry, 24, 25. Wherever year which is applicable for you, check the previous year.
If he is resident in India, it is
120 days, at least 120 days internal interest. If he is in India for at least 120 days, then he will be a resident, then he is eligible to become the designated partner. One can be other than resident also. So 120 days in previous year. If in LLP all the partners are body corporates, that means can a body corporate become a partner? Yes, individual body corporate can become. If he is individual, 3 disqualifications: unsound mind, order is still in force, undischarged insolvent. Third one is he has applied to be an adjudicated as insolvent, but the application is still pending. If everybody is a body corporate, in which one or more partners are individuals and body corporates, at least 2 individuals who are partners of such LLP. If no individuals, then body corporate has to appoint nominees, shall be as designated partners. Some representations has to be there. A limited, B limited, C limited. Start there on LLP. Okay, A, B, C has to appoint at least 2 individuals who will be designated partners of the LLP. Resident in India means not less than 120 days during the financial year. Financial year means that is previous year. Okay. You use the word financial year.
Suppose let's take same example. LLP founded December. So 120 days completed.
Okay. How are you so sure that every LLP will start in December only? I can start my business in April also, right? It should be applicable for everybody now. Then I don't read characteristics because everything which is already repeated, I just connect it to the company side. LLP is a body corporate because it is a registered entity, it is called as a corporate. It is only a perpetual succession, same separate legal entity, mutual agency. This is important, which we will discuss in partnership. So, what do you mean by the mutual agency? What are you discussing? After the class, which drill should we do? No, you do the what I told. Listen to the class when you are in the class. What is the latest drill? CA aspirant enters the become class. Huh? That is the latest drill. Is there anything already has come after that? No. What is mutual agency? In case of, I will talk about 2 things: partnership firm and LLP. See, because partnership firm is having unlimited liability, consider 3 partners are there. One partner does some wrong activity, because of which every partner is liable for that. Like if I do something, my partner, their personal assets also liable, and other partner also liable. That means one partner is a mutual agent and principal of all the partners as well as partnership form. In partnership form that is. But here in case of LLP, if I do something wrong, other partner is not liable. That is why the concept of limited liability is there. If you make everybody liable for my act also, then what is the purpose of having that limited liability? So one partner is not liable for other partner acts. LLP acts, all the other partners are liable. One partner problem, it is only his problem. It is not everybody's problem. That is what mutual agency. No partner is liable on account of independent or unauthorized actions of other partners. Thus, individual partners are shielded from the joint liability created by other partners' wrongful business decisions or misconduct. Simply, all the partners will be agent of LLP alone. No one partner can bind other partner by his acts. No one partner can bind other partners by his acts. Then again, LLP agreement, as we have MOA in case of Companies Act, here it is LLP agreement, which will decide mutual rights, liability, everything. How many partners are there? What is the name of the LLP? What is the profit sharing ratio? What is the type of business? What is the interest on capital? What is the appointment, retirement, removal? Everything is written in this LLP agreement. ALP, okay. Common seal here also optional, but it has to be signed by at least two designated partners. There are two directors, here it is two designated partners. Liability is limited. Who will manage the business? Not everyone. In case of Companies Act, board of directors. In case of LLP, two types of business will come. One is compliance with laws and regulations. That means filing all the documents with all those things is the responsibility of designated partner. All the other businesses, selling, buying, it is up to everybody. So it is entitled to manage by the partners of LLP, entitled to manage business of LLP, but only DPs are responsible for legal compliance. DPs, designated partners. What is the minimum and maximum? Minimum to maximum, no limit. There is no limit on maximum. But out of the DPs, one should be in India, resident in India. And as we have Section 8 company, here Section 8 LLP is not possible. LLP should definitely be profit oriented. Non-profit oriented LLP is never possible. Investigation means what? If LLP does something wrong, for example, cheating, fraud, all those things, can government come and do investigation? Yes, income tax, everybody? Yes, possible. Compromise and arrangement. What is compromise and arrangement? Somebody went to the court stating that I suffered a loss. Can they compromise between themselves and take the case back? Because it is also person, it is up to them. They can do everything whatever they want. Conversion into LLP, yes. Unlisted public company, private company firm, they can convert schedule 2, 3, 4. E-filing, every document which you want to file with ROC, you have to file it electronically, not physically. That is, as we had Spice plus form, all those forms, here also, LLP forms are there, separate. Same foreign LLP like foreign company. Foreign company means incorporated outside India, having place of business in India, by itself or by agent, electronically or physically. The second last 2 points eliminated. Itself or agent, electronically or physically, the words are removed here. What is foreign LLP? Any LLP incorporated outside India, having place of business in India, that's it, nothing else. Advantages, you read it. What is advantage? Limited liability is there. Perpetual succession is there. Everything, whatever the features we have seen, it is advantages. Because it is having only 6 marks weightage, I don't want to spend so much of time on this. How the incorporation of LLP happens? How the incorporation of company happen? File the run application, then Spice application, details of directors, declarations. Almost 95% of the similar procedure, only change here is Spice plus the form number will differ. INC 32 is for companies. Here we file Philip, FILLIP, Philip form. Run application is common. Result will be made. Did I show that in MC website once already? Not also, I'll show it once. You can check for company and this both. Tamil people, you can also check here. This is the main MCA website. You need the login credentials. As an individual, you can't do it. You have to be a professional person. Some business user is different, individual user is different. You can also create your individual user, but you can't do the incorporation. You need the signing authority. That is given only for CA, CMA advocate. So if you come to this MCA services here, I click on MCA service, and if you see, second one is LLP filing. If I click on LLP filing, there again run application. First you have to file, then fill it form for incorporation like Spice Plus, then form 3 LLP agreement notice. Other forms are also there. Annual returns, all those forms are LLP separate forms. But if you want to go for company, click on company filing. Under company filing, incorporation service. If you click on incorporation, then again comes run application, Spice Plus form, OPC, managing director. Everybody will come here. Again, company is every year there are many things. In charge management, it is not related to you. Just ignore. You can fine. Now consider for LLP, I go for run application. I have to check new incorporation. There is no sin. Which name I want to register? First, I have to check the code. Cloth. Which business you want to do? Based on which they will suggest something. For example, cloth means repair and alteration of cloth. I select. Because that is compulsory. NIC code we will let us. Main NIC, okay. Name. Which name I want to start? Any name? For example, Hamad LLP I want to start. Second proposed name if you want. Name must end with LLP. Oh, LLP having LLP. So second name if you want you can search. Which name? Briggy. LLP. Which that's okay, no. We have to check here. Auto check form. You have to click there. Here. Proposed name, Hamad LLP. Please note that the proposed name is similar to the name of an existing company LLP. Hamadia Private Limited. There is already some companies which are registered in similar names. Because if you take these names, again you have to take NOC from those people. My company name is different. No, please give me the no objection certificate. Let me have this name. If it is similar, if not, you can directly proceed. This is the thing. If you want to check trademarks, any trademarks are there. Here, Briggs trademark is also there, which is there in Mumbai, registered there. This is private company, Green Tech Chemicals Private Limited. Again, Briggs also there. Briggs Brewery Crafting Happiness is also there. Briggs Brewery Hoppy Feed. Briggs Brewery, everything is brewery only. So many things are there. If you want to proceed, you can go and submit it. You have to pay 100 rupees fees for run application. Then they will intimate you. Yes, your name is available. You can proceed ahead. Then you have to fill it form, Spice Plus form. Then proceed to other part. If it is company, if it is for company, run application is 1000. If it is LLP, run application is 100. That is what the simplification they want to do. Less cost, etc. So here also, every LLP you want to register, file and run application first, name available. Then you can continue with filing other forms, fill it form. There also you should do 3 declarations. First declaration is given by professional people, CA, CS, advocate, CMA, stating that whatever the compliance is required to incorporate LLP is compliant. Then second declaration is by the designated partners and partners, stating whatever the details given to the CA, CMA is true and fair. And the third declaration is we are not convicted under any act in promotion, formation, management of earlier LLP or company. That has to be clear. Along with that, you should give the details. LLP agreement should be filed. LLP agreement can be filed later also here in LLP. You should file your name, surname, details, mobile number, any LLP or already member, etc. Everything has to be clear. Once it is satisfied, ROC, then they allot something called as LLP IN. There we have SIN number, corporate identity number. Here it is LLP IN, limited liability partnership identification number. Corporate identity number, LLP identification number. Then they also use certificate of incorporation. Have you seen certificate of incorporation? I think I have shown in the earlier class also. Some certificate of incorporation was also they issue. It is not there, but it is. I have to open my drive again. Archivist will check. Yes. All the Philip forms are available here, but I can't show it because of the. I should maintain the privacy of the client.
You showed it to us.
Don't tell the keep quiet. This will go for you too. So continue. So what is incorporation? Then again, if it is incorporated by filing wrong information or other false information, then the same punishment. Wind up, merge with some other LLP, same punishment is there. Here, one important thing is this they ask LLP agreement. The incorporation document, that is called as LLP agreement, shall be in the prescribed form. That is Philip form, it should be there. And what should be the content of LLP agreement? State the name of LLP, proposed business of LLP, what you want to do, address of the registered office of LLP. See, here they never told us proposed name of LLP. Why? Because the moment you file this document, you already got approval from run application. The name is already yours. That is why they directly use the word name of LLP, not proposed. But here business is proposed business because we are filing this object, name, address of each person who are trying to become the partners of LLP and incorporation. State the name and address of persons who are to be DPs on LLP incorporation. Contain such other information required as prescribed. If it is false or not correct, imprisonment up to 2 years and penalty up to fine up to 10,000 to 5 lakh rupees. And how do you incorporate? You should get it incorporation only by registration. You can't do it by any other way. You have to file with ROC will register, then only will come into existence. Without incorporation means that tea shop, panipuri shop, you can do the business without incorporation also. But here LLP name you want to do it, get incorporation, then only it is possible. This is also same. Yeah, registered office of LLP and change the name. If you have registered office at the time of incorporation, file it. If not, within 30 days you file it. Same content. Effect of registration. Once you are registered, can you hold the property? Can you sue somebody? Can you enter into contract? Yes. Same part. Here, name of LLP. As our Companies Act, name of the company should end with private limited, private limited OPC. Here also name of the LLP should end with limited liability partnership full or an acronym LLP. If you want, you can go and check. I don't know whether it is correctly there or not. Success Edge Academy is also an LLP. The name should end with Success Edge LLP. If you check there, if it is there, they are complying with the law. If it is not there, they are not complying with the law.
We can sue them, sir.
Why you want to sue them? No LLP shall be registered by a name which in the opinion of the central government, see this is important, name section is important. You should not use any name which is undesirable in the opinion of the government or which is identical or too nearly resembles to that of any LLP or trademark under Trademarks Act 1999. Run application you have to do it. Okay. See, whenever you want to talk about the name, there are two possibilities. One is you are bringing the new LLP into existence, reserving the new name, or you already registered with some name, you want to change it now. Then also you have to make one more application. The new name is available or not. There are two types of change of name. One is voluntary change, that you don't like the name, you want to change, you can do it. Second type is you registered with some existing trademark or LLP or company name. Then somebody complained to central government, sir, my name is used by somebody. Then central government will give you an order to change your name. Once they give the order, within 3 months you have to change the name, file it with ROC, ROC will issue new certificate of incorporation. If you don't change within 3 months, central government only will allow some random name, ROC will issue new certificate of incorporation, they don't even care about it. That is mandatory.
So tagline comes under name. Tagline.
No. Trademark comes under name. For example, logo, brand name comes under this name. Tagline, anything you can keep it. Tagline is not defined. Tagline is to identify your company. It is not your company. It is like a distinction for your company. जिंदगी के साथ भी जिंदगी के बाद भी. Who is that?
LIC.
Huh?
LIC.
LIC.
Yeah.
Chandigarh.
There was one more also. Wherever you go, we follow you.
Then
It is one company. Hutch company is there. Mobile network. One person is there. One dog is following them. Network. You go to general also, you will be there with you. That's what they give advertisement. That's it. LLP also done. One thing you have to do is read this difference between, this is the only hope question that can come in the examination, 6 marks. LLP with the company or LLP with the partnership form. Company difference anyway we know, LLP we just discussed, partnership we'll discuss tomorrow. Then you'll understand. Questions, we'll do it in tomorrow's class. So go home, revise it, go through the question papers also. That is important.
I cannot get this question.
1 second. Yes, tell Samantha. Which PDF? Like written PDF.
Totally. Will you be sending us that question? Question back.
And what?
Sir.
ICAI model you refer ICAI model.
We'll have to take out all the questions.
Why the means what should I do? Go home. See you tomorrow. I'll check whether can I share it up on later. Huh?
how do you, how is the preparation going?
And then if you have any doubts, you can ask. You can comment in the comment box also. Others you can directly contact us via our website. There will be a WhatsApp number given in the website. If you have any doubts, you can talk to us. Please do revise everybody so that we will get the best out of the examination. Thank you. Bye.